Hello, everybody. Welcome back to another episode of The Market Close. We are here today, Tuesday, February 4th, 3:45 p.m. We've got Google, we've got AMD, we've got Snappy Chat, and we've got Chipotle after the bell. We are fully into tech earnings. Big tech earnings continue today with Google. Then we got Amazon on Thursday. So we've got a lot to talk about, a lot to discuss, and we're going to be seeing a ton of different results that come out today. And it will be implicating a variety of industries outside of just tech. But these results will be important for the broader market going into the rest of 2025. On top of that, we also have a little stock that some of you guys might know about, Palantir, that has not given up $100 on the day. I think the lowest we got to on the day was like 102. Around 102, 101.05, 101.05. Ever since then, I mean, we didn't even get below 101, and we have not gotten below 100 either. So congratulations, everybody. 24% up on the day. It looks like in the next 14 minutes, we are going to close above $100. We got as high as 106.91. Obviously, the street is thinking that there is some momentum with Palantir, and that's why the stock is up 24%. And it's incredible. I mean, what more can you say? We went through all the numbers this morning. The numbers are amazing. Stock prices reflecting a lot of the excitement from the street or from retail. Whoever is buying it to the tune of another $35 billion in market cap today, they do believe there is a bright future for Palantir. So 103.67 for Palantir, up 23.89%. Now, after the bell, we've got Googs, which is up 2.7%. We'll talk a little bit about them. We've also have Grab that I think is going to close above $5. They are up today because of an acquisition rumor for them. Acquiring one of their biggest competitors in Indonesia would massively re-rate the narrative and the stock itself. So nice to see Grab getting 71 million shares in volume. Average is 18 million shares. So a nice little 2.5x in terms of how much volume it's getting today, up 12.67%. SMCI is up 9%. AMD is up 4% going into earnings. Meta, 703, that's up 1%. You got Robinhood at 52.52. We have some news on Robinhood we'll talk about in a second. Amazon, new all-time highs. NVDA, 118.45. You got SOFI that's down today with some of the banks. And then you got the S&P 500 right here at 601.44. So we got a lot of stuff. We got a lot of stuff to get in today. Google and AMD are going to be very, very important. AMD, I think, will have implications on NVIDIA. Google will have implications on Amazon and big tech. And so, like, they're just really important companies. Snapchat, I have 400 shares on a swing trade on, so I would like Snapchat to go higher. That would be nice. Not expecting it to because it's Snapchat. But besides that, we're going to have to see what happens here with Google and AMD. In terms of Technical Tuesday, I do not think we are doing it today. Jason was not able to get back to me yet. I'm pretty sure he's busy during this Google call. So if he texts me back, then yes, we are doing it. If not, we're probably not. I would imagine he is busy today because he's probably trading through these earnings. So I would count on right now, we're going to be listening to the Google call. And if he hits me up, then we'll get into Technical Tuesday. But if not, then it'll be listening to Sundar and see what he has to say. You know, you guys love Technical Tuesday. Like, all of you guys love it. The one guy who does not like it, the one guy who doesn't like it is the guy who does not give a shit about technical analysis. He just cares about execution, which is why his company's stock is currently up 24%, 103.84. Speaking of that company, I want to play a clip by someone on CNBC that has gotten the story right for the past basically year and a half now, when they jumped on the Palantir train. Brynn Talkington. I think this woman is fantastic. She's amazing. She understands the analysis around Palantir really well. So we're going to play a clip of her talking about it. We saw some coverage from Dan Ives today. I got to talk to him on the Market Open. We saw Brent Thill upgrading his price target on Palantir, although he still has some fears and concerns about valuation. Well, let's listen to this. And then in about 11 minutes, we've got Google and AMD. Those are going to be the big ones today. Let me know in the chat who owns Google or AMD. I know there's going to be massive implications for semiconductors and big tech based on these earnings. I know a lot of you also have dabbled into AMD. So this is going to be a big one. And we'll see if Elisa Su and Sundar can deliver.
It's really just amazing. You know, in 2024, investors who were listening to the earnings call woke up that Palantir has always been, but now with the commercial business growing, a pure play AI enterprise software company. And I think that you're seeing that today with the stock up 22%. the stock is still very under-owned. And I think that's one of the reasons the stock is up so much, is people just did not really pay attention to what this company's doing. Their commercial business grew 64% year over year, 20% quarter over quarter. And I think when you have a company that's under-owned, it's in the square, perfect spot of AI, and they have zero competition, or no competition that I know of. I think that's why you're seeing this huge reaction on the upside.
So, Brynn, I mean, you're talking about a huge reaction. How about the huge valuation as well? Are you concerned about this valuation? Stock trades at about 200 times forward earnings. And then is there any other, I guess we can call it Doge risk in this name?
Yeah, I mean, Doge risk, no, I think there's like Doge reward, because when you have the governments having the inefficiency of how we do cost plus, the DoD with Raytheon and Lockheed, I think that ends. And you have a company like Palantir that already has all of the moat around government projects. That's just going to continue to amplify. I think around the valuations, I mean, the viewers will know if they remember January 2nd or 3rd, I sold over half my position in the 70s because I bought it at 25. And so it's like, that's an amazing return. And so I do think the valuation is really high. I think investors, if you don't own it, you are in this tough spot, because this is a darling, it is expensive, but don't look at PE. This is like not a stock. You look at PE, you look at their margins, you look at their growth, you look at where they are, and take opportunities to build a position, because it will have some weakness over time.
So, Josh, I just heard you chiming in there. By the way, stock's up over 500% over the last year. Josh, you were about to say something about the stock and the company when I said, is there any Doge risk? Just asking, basically, because big part of their business, of course, is tied to the government.
I want to congratulate Brynn. This has just been an incredible trade or investment for her. But it's worth pointing out, as recently as last fall, this was one of the most heavily shorted stocks, not just in dollar terms, but just in terms of like how widespread the short thesis on the company had been. And obviously, Trump taking office changed that narrative. So probably some of the short squeeze had happened prior to today. But I can't help but think there's got to be, maybe on the option side, there had to have been a lot of money betting against the name when they report admittedly great quarter, but get this outsized of a move. So there's probably some element there as well of the end of the short squeeze that lets.
So that's what you got on Palantir. I have seen tweet after tweet after tweet today about the FinTwit bears that have historically been incredibly bearish on Palantir because they bought at 6 and they sold at 20 and they never thought it could go higher from there. All I have to say is, like, I genuinely mean this with respect. I think they didn't analyze the business. They analyzed the stock. And it's so funny that they're complaining, Palantir right here, 104, about the stock and the valuation and all this stuff. It's like, you only cared about the stock and you got a great return off of it, but you missed so much upside because you only were focused on the stock, not the company. Because, I mean, if you get in at 6 and you sell at 20 and you think that's a great return, that's amazing. But you can't complain then when it goes to 104, because obviously there was something that was happening from 20 to 104 that mattered, that you got right because you came in at 6 or 10 or 8 or 15 or whatever. But you got wrong because you sold way too early because valuation got to be a big concern. And I think, you know, it's not that it's wrong to care about valuation. That is a very important thing. It's just a lot of the people that are salty today cared way too much about it versus the actual fundamentals of the company, the culture, the mission, what Karp is building. And as a result today, they're pretty upset about it. But for those that believed, those are getting rewarded. So Palantir right here, 104. It'd be really awesome if we can close above 104, up 24%. The poll I have in the chat, by the way, Google's at all-time highs, is who do you think is going to do better, Google or AMD? And 58% of you say Google, 42% of you say AMD. It is a tough one. I thought of this question right before I went live, and I thought it would be tough. And it's 60-40, but I don't know, dude. Google's at all-time highs, but everyone thinks Google's gonna have a great quarter because of Microsoft and Apple. Apple didn't grow that much, but the point is, big tech is doing good. Meta did really well, right? So Meta is kind of proving, okay, Google's going to do well. Microsoft didn't do the best, but they had good cloud growth, at least in this quarter, even if not in guidance. That proves that Google should be able to do well in cloud. So theoretically, Google should do great. The problem is the stock is trading on the max chart right here at all-time highs. And I don't know. Is it easy for it to pump after being at all-time highs? AMD is trading at not all-time lows, but definitely lower than where it was in February of 2024 at 227, now down to 119. And everyone and their mother believes that AMD is undervalued compared to NVIDIA, which is actually incorrect in my opinion, just from like the PEG ratios, especially after NVIDIA fell 20%. But still, people feel that NVIDIA at 3 trillion, AMD at 200 billion, there's a lot more room for upside on AMD, which might be true. So I don't know. I really don't know which one is going to outperform, but we're going to find out in about 4 minutes and see how this ends up playing out. So we got Google after the bell. Let's make our list real quick. We have today's 2-4. So we have Google, we have AMD, we have Snapchat that I now care about because I've got some money in it. Snapchat's actually up 3.72%. So hopefully they have a good quarter. If not, this thing goes back to $8. AMD, I also have money in Google. I'm long Google with my calls for 2026, 150 strikes. So I am hoping Google does well. And then we have Chipotle. And then we have FICO. And then we have Enphase. Oh, I forgot Enphase. That's going to be another one. FICO right here is down 1%. Enphase is up 3.7% as well. And then what else do we have today? That's mainly it. I guess we have Mondelez. That's another one. But outside of that, these are kind of the main ones that we're looking at. To be honest, Google and AMD. Those are the big ones. Wow, AMD up 4.4%. Look at that. AMD pumping into the close. Amit, are you doing any of the calls? Yes, probably Google. Google's at 4:30, so we'll probably be doing Google at 4:30. So we'll have about 30 minutes to look at all the results and see what's happening. And then at 4:30, we'll get into Google. Look, this is important in general because like we've had a really good earnings season so far. Obviously, Palantir crushed it yesterday. We got a lot of regular companies, United Airlines. I mean, like every Spotify crushed it. Netflix crushed it. By the way, Netflix hit a all-time high today. Netflix right here at 994. It's looking like it's going to try to close above 1,000. But we just need companies to keep doing well, to keep this bull market alive. And so I want all of these companies to do well, regardless of what industry they're in. It's just going to be a question today if they can put up the numbers and the guidance, quite frankly, that's important. The other thing about Google that we really need to pay attention to, CapEx. I believe they spent about $55 billion last year. Can Sundar, you know, if I was Sundar, which I'm not, but if I was, I would start the call by saying, I'm good for 81 billion. That's what I would do. I would start the call and say, I'm good for 81. And I wouldn't even, that's it. That's all I would say to start my opening statement. And hopefully the street gets the message that it's Big Daddy Googs in the house, all right? And we're ready to spend on some CapEx. So it's going to be important. We're going to have to see what is the CapEx spend? What is the search growth? Is YouTube doing well? They've got some tough comps. Advertising via the election was really good in Q4 for Meta. Is it going to be good for Google? Can they beat expectations? Can they raise the buybacks? Can we go from 70 billion to maybe 90 billion? I mean, like, where is Google taking this? I think a lot of these questions we're going to have to find out today. And then for AMD, again, I just don't know enough about the business, but can they give good guidance? So one time I covered AMD's Q4 earnings. This was back in February of 2024. I just remember it was bad. Like everything was declining or flat year over year, and their guidance was bad as well. So now, granted, the stock was at 200 at the time. Now the stock's at 119. So even with those results, you should still be able to get a little bit of a pump if there's anything positive. And I imagine the company knows that as well. It's going to be important. It's going to be important. Big, big, big day. Let's see what we've got going on. We got about 30 seconds into the close. Let's just put it on Palantir. As we get into the close, it looks like Palantir is going to close above $103, maybe 104. 30 seconds left, 7 cents away from 104. What a freaking day for this stock. I've been getting a lot of messages all day from a lot of people. Obviously, this is it's just one of those days, right? It's one of those days, one of those moments, one of those companies, and one of those journeys as well. So exciting, exciting stuff. Here we go. Big tech earnings continues on February 4th. Ladies and gentlemen, it is Tuesday, 4 p.m. The stock market is now closed. All right, there we go. Palantir, for its first time ever in history, closes above $100, 103.83, up 23.99%. on the day. Netflix closes at $994.87. That's up 1.67%. Grab, we got the $5 close, baby, up 12.56%. Grab at $5.11. Meta closes above $7.04. SoundHound, great day for them, up 10.3%. That's up at $15.71. Robinhood, we did have some news on Robinhood. They can't do the Super Bowl contracts anymore because some government agency is being kind of stupid. We'll talk more about that later. Not really that big of an impact on the stock, but Robinhood right here down 1.31%. Amazon at 242, new all-time highs. NVIDIA 118.65 was able to hold that 118, 117.50 level really nicely. SOFI was down on the day by about 1%. S&P 500 at 601, that's up 0.65%. Tesla end of the day up 2.2%. Ulta Beauty was up 0.26%, and Rocket Lab was up 1.06% on the day. All right, now we wait. Now we wait for earnings. Now we wait for earnings. This is why talking fast matters, dude. Sometimes you gotta move on from a topic really quickly, but give people the synopsis. And if you could just take 30 seconds and sum it up and then communicate it, boom, you can move on. So there you go. We got through that. We got through that pretty quick. Google's pumping. Are we pumping on Google? Are we? No, we're up 1%. Okay, not yet. Not yet. It's up 0.86%. We're at it's at 211. It hit 211 for a second. Now it's at 209. Now it's at 209. 57% of you think Google does better than AMD. AMD is flat. Snapchat's up 0.5%. Enphase, after hours, we got 2.6 on Enphase. We got 2.6 on Enphase, so we got a little bit of green. A little bit of green. Oh, Google's down. Oh, it's down. Hold on. This might be a head fake. This might be a head fake. It's down 3. It's down 3. It's down 4. 4 is bigger than 3. Now it's down 2. 2 is less than 4. Back to 3.2. It might be a head fake. Now it's down 4.5. Now it's down more. Now it keeps going down, but now it's 3.7. Okay, so it's kind of normalizing between 3 and 4% right here. We are red. Let me see if I can get the numbers. Oh, we just went below 200. We just went below 200. Hold on. Let me see if I can get the numbers on the Googs. What's going on the Googs? Again, this could be a head fake. This is still relatively quick. We could see this reverse, but it looks like it wants to keep going down. We're down 5%. We're down 5%. No numbers on Google yet. Nothing that I see. AMD is also down, but not down as much as Google. Google's down 5%. Snapchat's up 0.5%. The Googs is down 5.16. Oh, here we go. EPS 215 versus 213. That's a beat. Revenue misses. Revenue misses 96.4 versus 96.6. That's a very small miss, but nonetheless, it is indeed a miss. And then operating income was 30.9 versus 30.7. That's a beat. It's not a big beat, but that's a beat. Yeah, Google's down. Google, this is not a head fake. Google's going to be red. Unless Sundar says something on the call, Google's red for the day. Down 6%. There you go. Down 6%. Snapchat is up 0.5%. AMD, I don't have the numbers yet, so AMD, I don't think there's any move, but Google is down. Now, look, is that crazy? Not really. Google was at all-time highs going into the print. So do I think that's crazy? No. However, the street's getting a little aggressive for a 20 million revenue beat. So I think there's something else they don't like about this report that they're trying to digest. And that's why we're seeing some of the pain. That's why we're seeing something. Wow, 193. All right, now it's down 7%. Yeah, there's something else, guys. It's not a $20 million revenue miss. There's got to be something else. There's got to be something else here that's making the street upset. I'm trying to find all the coverage I can. Those are the top line numbers. Google did not release it on their website yet. Let's see. Is this still tanking? Yeah, it's still going. It's about to be 7.5%, dude. AMD just turned green after hours. Nothing crazy, but it's green. Enphase is up 2%, so Enphase got a little bit of a bid. Snapchat, I don't think the results are up. That's up 0.5%. Google 7.5. It's going beyond 7.5. AMD up 0.25%. Oh, they missed on cloud. Oh no, they missed on cloud. Okay. Oh, AMD's up. AMD's up. Well, Google missed on cloud, but maybe AMD is about to go to a different cloud right here and get higher. 1.23%. I'm going to wait to see if that's a head fake or not. 1% is not a real move. It needs to get to 3% to make us feel like there's actually legs behind that. Google, though, they missed on cloud million. It's not a crazy miss. It's not a crazy miss, right? 11.96 versus 12.19. That's a miss, but it's, well, I guess at the multiple Google was trading at, not saying Google was expensive, but I mean, if you're trading at all-time highs, you kind of got to be really good, right? You can't really mess up. I guess that's why the street's trading them like this. AMD right here. I have the Google numbers, by the way. We'll look at AMD for a second, and then we'll get into Google. I have the entire report. AMD's up 2%, so we're green on AMD. We're green on AMD. Let me see if I can get the AMD numbers. Is AMD about to go red? It's holding on. It's holding on. Let's just see. I think they beat on the top and the bottom, if I'm not wrong. I think they beat on the top and the bottom for AMD. Google, again, missed on revenue. Oh, Enphase, by the way, beat on the top and the bottom. 94 cents versus 75 cents. That's a big beat on EPS. And 382 versus 377 on revenue. I'm happy for Enphase because, hopefully the solar drought is kind of bottoming here. And so a beat on the top and the bottom seems really good, at least in the short term for Enphase. Google, again, missed on revenue, beat on EPS. We don't have AMD yet. I don't have AMD. AMD is barely holding 1.5%. Google is now, Google's down 7%. It's not down worse than 7.5. Bottomed at 191, right now at 193. But Google is indeed down. AMD right here, yeah, it's giving away. It's giving away some of the gains. Broadcom's up. Hold on. Broadcom's ripping. Broadcom. Why is Broadcom up 5%? Let's put NVIDIA on the list as well. Why is Broadcom up? NVIDIA is also up 1%. What's happening with Broadcom and NVIDIA? How is this? Where's the headline coming from? AMD numbers are out. Hold on. Let me check. AMD is not out on my side. Let me try to check a different source. It has to be out though. Google CapEx. Oh, what's the CapEx number? Hold on. Google. Oh, we forgot the CapEx number. That could be another reason it's going down. Yeah, I still don't have AMD. The CapEx number for Google. Let's see. Oh, AMD is 415. Oh, why were we freaking out then? Why are we freaking out? We got 8 minutes on AMD. Alphabet, wow, 75 billion. Let's go. Let's go, baby. Wow, that's why NVIDIA and Broadcom are up. Holy crap, 75 billion? And people thought DeepSeek was the bear case? What? People thought DeepSeek was the bear case? 75, that's 20 billion more. Holy crap. AMD is now down 1%, but again, I think we have 8 minutes left until we get the results. So we got to wait. Google, look, if Google tanks a 6% because of freaking 75 billion of CapEx, I'll take that any day of the week. I mean, that's a stupid reason to tank. It's a reason to tank, but is it a legit reason to tank? Not really, because they're going to get an ROI on that in the future. And maybe the street doesn't want to give them a multiple expansion when it's trading at all-time highs, which is understandable. But you know who the street can give a little bit more of a multiple to? The company that they're spending some of that 75 billion at, which is NVIDIA, up 1%, and then Broadcom right here up 3.85%. Wow, 75 billion. 75 freaking billion. Google right here down 6%. AMD still waiting on the numbers for AMD. Is Amazon down? Amazon is down 1.45% on this cloud miss. All right, so let me bring up the Google numbers. I have the Google numbers right here. In 8 minutes, I'll go to Alphabet. AMD. Enphase at 75, not bad at all. You don't know if the CapEx will have a great ROI. That's true. You don't. I mean, we will see. That's the promise of AI, right? But the point is, it's definitely going to benefit NVIDIA and some of the other semis. All right, Google, here are the results. Revenue, 12% year over year, 96.5 billion. Services revenue, 10%, 84.1 billion across search and YouTube ads. So 96 billion was top line, 84 billion was search and YouTube. Cloud revenues, 30% growth. That's nothing to scoff at. 30% growth. 12 billion led by growth in GCP across core GCP products, AI infrastructure, and generative AI solutions. Total operating income was up 31%. Operating margin expanded by 5 percentage points to 32%. That's incredible. Operating margins of 32% are amazing. Net income, 28% year over year. EPS, 31% growth year over year. That's probably fueled by a lot of those juicy buybacks. Here's what Sundar says. Q4 was a strong quarter driven by our leadership in AI and momentum across the business. We are building, testing, and launching products and models faster than ever and making significant progress in compute and driving efficiencies. In search, advances like AI overviews in Circle to search are increasing user engagement. Our AI-powered Google Cloud portfolio is seeing stronger customer demand, and YouTube continues to be a leader in streaming watch time and podcasts. Together, Cloud and YouTube exited 2024 at an annual revenue run rate of $110 billion. Goodness gracious. Our results show the power of our different differentiated full stack approach to AI innovation and the continued strength of our core business, we are confident about the opportunities ahead and to accelerate our progress. We expect to invest approximately $75 billion in capital expenditures in 2025. It's very important that Sundar put that sentence at the beginning of the statement because he's basically telling everybody it's real. It's real, and we are spending money on CapEx. Snappy Chat. Oh my. Snappy Chat. Up 13% on the chats of snaps. Chipotle. Looks like Kava was better. Chipotle down 10%. Google down 6.5. AMD, we still have 5 minutes until AMD comes out. AMD is not up yet. But Snappy Chat is up 10. All right, let's try to get some Snapchat numbers here. Let's see. Let me see if I can get it. Looks like the street likes what they're seeing from Snapchat. Here's Google, by the way. Let me get Snapchat. And then in 5 minutes, we've got AMD.
And the advertising revenue. The only thing I just want to add here, because everyone is looking at this number in a post-DeepSeek world, Alphabet expects to invest about $75 billion in CapEx in 2025. I believe that would be a step up. And again, we talked about this all day. It's unlikely that you're going to see these hyperscalers, these AI big tech companies really scale back on their AI spend just now because the stakes have just been risen so much. So again, expecting to invest $75 billion in CapEx this year.
All right, Debosa, thank you. Brenda, Alphabet, if it were trading at this level when the market opens tomorrow, be right back in that range.
Okay, so we got that on Google. Let me see if they have Snapchat numbers. We don't have Snapchat numbers yet. Let me see if I can find those real quick. And then we have AMD in 3 minutes, guys. Looks like Snapchat did something that got the street excited. Chipotle missed on the top and the bottom. Snapchat beat on the top and the bottom. There you go. That's the difference. That is the difference. So right here, oh shoot, I meant Chipotle. Not Chipotle. I meant just erase that from your memory. I meant Chipotle. Chipotle missed on the EPS 24 versus 25, and then revenue 2.84 billion versus 2.85. They missed on revenue. Snapchat beat. Wow, Snapchat became profitable. Oh my God, Snapchat became profitable. Oh my goodness! For the first time since Evan Spiegel took this sexting app public, they have produced 1 cent a share. Wow. Snapchat's profitable for the first time ever. 1.18 billion in revenue versus 1.5. They beat on revenue and they beat on EPS. They're profitable. They are finally profitable, or at least they're profitable, or maybe they would have been profitable the past couple quarters, but for the past 5 years, they haven't been profitable. They might have produced a profit last quarter or something, but 1 cent a share is 1 cent a share. There you go, up 10% on Snapchat. And look, even if 1 cent a share doesn't matter, you get back to profitability, or you really start scaling into profitability, the street will get excited. Now, granted, I don't trust Snapchat ever. So it's up 8%. It could be down 8% after the call if they say something. I really don't trust management in this company. I'm just not a big fan of them. So we'll see, but it's holding it right now given the profitability. Chipotle right here is down 5%. It was down 10%, so now it's down 4.2. Broadcom is pumping and NVIDIA is pumping because Google said they're going to spend $75 billion in CapEx for 2025. Expectations were $57 billion. Google's down, which makes sense. NVIDIA and Broadcom are up because they're going to get a majority of that spend, or at least in a decent chunk of it. And so that's why they are up right now. Wow, somehow the poll switched from Google being in the lead for which one does better after the bell to now AMD's in the lead. I just wonder how that happens. Google had a 60-40 lead, and now AMD is a 52-48 lead. I just wonder what happens to the results when Google falls 7%. Somehow it just magically changes. Somehow, magically. Okay, AMD. We got AMD. Here we go. This is a big one for you guys. I have no position in AMD. I am hoping this thing goes to the moon for everybody here. I really want to see you guys win. I don't care if AMD goes up or down. I care if it goes up for you guys. If it goes down, it is what it is. But I am hoping for a massive pump on this one. We have 30 seconds. We should be getting the results very soon. And let's see. I think we're going to get an initial reaction on this one, and then we'll see if it's a head fake or not. But we are going to see if AMD can get up there. Let's see. Put in the chat if you own AMD. Put in the chat if you own. I see so many rocket ship emojis on AMD. All right, so I think like 85% of you guys own AMD. Here we go. It is time. Let's see if we can pump. Should be out any second. I don't have the numbers. I'll be looking at my other screen, but let's see. Let's see where it goes. We're a little green. We're a little green. We're a little green. Up 0.5%. Let me see if AMD's numbers are out. Up almost 1%. AMD, I don't have the numbers. Electronic Arts, by the way, missed on the top and the bottom. Still relatively muted reaction. Google still down 6.5. Snapchat's up 7. Mondelez down 3. Broadcom's up 6. Chipotle's down 3. AMD still flat. AMD still flat. All right, we're going to find out soon, dude. We're going to find out soon. I'm refreshing to get the numbers. I don't have them yet, but it should be pretty soon where we will see. It will be pretty soon where we can see. Up, we're green. We're green. We're green. We are green. We're green 3%. 3% is usually what you need to avoid the head fake. Let's see if it can hold. 3.5. It's going to 4. It's going to 4. 4.3. 4.2. Can we get 4.5? Can we get 4.5? 4.5. Now we're at 5%. 125. It is green. It is pumping. It should be a beat on the top and the bottom. Let's see if it can hold that. Don't have the numbers yet. Let me see. I think it stays green, folks. I think, especially with Google spending that much on CapEx already, that's like a positive tailwind in general for the semis. So, oh, we got a beat. We got a beat on the top and a beat on the bottom. 109 of EPS versus 109 expected, so it came in line with expectations. And then revenue 7.65 versus 7.5. There you go. Beat on the top, beat on the bottom. Beat on the top, beat on the bottom. Operating margins, 26%. That's a little bit lower than what the street expected. EPS 109, that's in line, 7.6 versus 7.54. That's a beat. And AMD is really holding on. It's not giving back too much of its strength. 5%, 5.2. It's about to make a new high. I think it's about to make a new high. If it crosses 126, we get a new high. Getting rejected a little bit heavy there, just gave back. Now it's back at 124. Google still down 6%. AMD now up 3% after being up 5%. But look, they have a double beat, which is bullish no matter what happens. That is good regardless at the end of the day. AMD, okay, it's giving back a little bit too much that I would like. I would not like it to give back this much. Still holding 3%. When you get below 3%, that's when you start thinking, all right, what's going on here? But it looks like it can hold. It looks like it can hold. Snapchat's still up 8%, Google down 6%, AMD up 3.6%. I think the call is going to be very important for Google. Call is going to be very important for Google, or not just Google, AMD, to kind of determine what the 2025 vision is for guidance. I don't think they give guidance before the call, so I think that's going to be important as well. But that's what we have to see. That's what we have to see. Where is NVIDIA? NVIDIA's up 1.3, and then Broadcom's up 6. Google right here is down 6%. By the way, Jason just texted me, and he said he's good for Technical Tuesday. He is good for Technical Tuesday. So I am sending him the link, and we should have him on in about 10 minutes. So let me send this to him. Wow. All right. So Google's the loser here, huh? Google's the loser here today. Google's the loser. AMD's still up 4. Chipotle's down 3. Google is down 6. Let's get a little bit more coverage on some of these earnings, and then we'll keep going from there. Let's see if they have AMD numbers. Street doesn't have AMD numbers. They have Snapchat, though. Let's look at Snap, and then we'll get AMD pretty soon.
453 million. That's 2 million ahead of estimates, showing consistent user growth over this past year. Earnings guidance did fall short of expectations. The company is saying that its first quarter adjusted EBITDA will be between $40 and $75 million. That's well below the analyst consensus of $78.5 million. The company is saying first quarter costs will increase around growing their employee base, among other things. First quarter revenue guidance is in a range with a midpoint just above the analyst consensus. You see shares are now up 14% on this news. Back over to you.
All right, Julia Borson, thank you. We've got Chipotle earnings out as well, and Courtney Reagan is doing double time here. She has the numbers for us.
Yeah, making me hungry, Morgan. So Chipotle putting up earnings per share. This is a beat at 25 cents adjusted. The street was looking for 24 cents, so 1 penny, but it counts. Chipotle revenues coming in about in line at $2.85 billion. The comparable sales a little light, up 5.4%. The street was looking for those to grow 5.7%. The company does note it was driven by 4% transaction growth. And then the full year comparable sales growth pretty much in line with expectations. Are calling it low to mid single digits, and the street account is looking for an estimate there of 5.4%. Some interesting commentary.
Okay, so Chipotle double miss, Snap double beat, and is AMD down? AMD is red. I'm sorry, guys. I really I don't have a dog in this race. I want everyone to make money on this one. It's not able to uphold it. It's not able to uphold it. Data center miss. Oh, that's not good. You can't miss on data centers, bro. Come on. You cannot miss on data centers. Are you kidding me? Data centers is like everything right now. This is where all the money is being spent. You can't miss on that. That means Jensen's eating some of their lunch. That's my quick naive take on that headline. If data center missed, oh boy, yep, down 2%. So the street reacted to the frontline numbers, but then they got upset for the data center miss. NVIDIA is giving back some of the gains as well. Broadcom's the real beneficiary, holding 5%, but AMD is going red now. AMD is going red. I can't find the data center. Their website's not loading it. There's probably too many people on it. Let me see if I can get it from somewhere else. AMD data center miss. How bad was the miss? Because if it's a really bad miss, then we've got an issue with the stock. If it's like 20 million in the streets being stupid, then I don't think that's something you worry about. Wow, dude, no, like that. Oh, well, you guys be the judge for me. You guys be the judge. AMD now down 3%. Is this that bad of a miss? Street wanted 4.1. They came in with 3.9. Is this that bad? I mean, I don't think it's that bad, but if there is an AI arms race going on right now, how do you miss on data centers? Right? Like that's not a naive take or anything, right? Like you can't miss on data centers in a world where Trump wants to spend freaking $500 billion and SoftBank wants to put $25 billion into OpenAI. Why? So that OpenAI can get more money to invest in data centers to train more models. Like some of that spend theoretically should be going to NVIDIA, even if all of it doesn't go to NVIDIA. Meta has a great relationship with AMD. Or sorry, some of that spend should be going to AMD, even if all of it doesn't go to AMD. Meta has a great relationship with AMD. So it's like, what are they not being able to execute on that gets them to miss on that metric? They can miss on gaming. They can miss on any of their other metrics, but data center is the one where it's like a little scary to miss on, even if it is a slight miss. At least that's my first impression from that. Client revenue was a beat, 1.94 versus 2.3, but data centers, that's what got you. That's what got you. Where's NVIDIA? NVIDIA is still holding its green. NVIDIA is still positive. Didn't go red after ours. Broadcom still 5%. Google's down 6.5. Snapchat holding 9%. So great for Snapchat. AMD now down 2%. Chipotle down 3.7. Enphase is up. Wow, we didn't even look. I mean, we saw the Enphase was a beat on the top and the bottom, but it was only up 2%. Now it's up 8%. So shout out to Enphase. If you hold this one, congrats. If you hold this one, congrats. Rango says if they beat on guidance, then it's just accounting issues. I'm trying to find the AMD guidance. Let me see if I can get some more coverage here. Data centers seems to be the story that the street is upset about. All right, here we go. We got some AMD. Let's see right here.
09, that's stronger than the street anticipated on $7.66 billion for the fourth quarter. In terms of Q4 gross margins, that came in at 54%, so also a little bit higher than what the street was anticipated. For guidance, Q1 coming in at $7.1 billion, higher gross margins for Q1. They're anticipating it at 54%, which is slightly lower than estimates, but nonetheless still in line with what we saw with Q4. And I'd like to point out that data center revenue came in at $3.9 billion in Q4, so slightly lower than what the street anticipated, but nonetheless shares are jumping about 4%, as the CEO saying in this press release that it was a transformative year, and really the market was quite downbeat going into this earnings report. Shares are down about 33% just over the last year versus the SOX ETF down up 8%. So that could be a result as to why you're seeing the stock up much higher right now.
All right, Christina, thanks. Rohit, want to go back?
Okay, so the CEO said 2025 is a transformative year. Is that a year where transformative sounds very close to transitional? And Alex Chris kind of said that today on PayPal, that it was a little bit more of a, he didn't use the word transitional, but he basically said this is a year where we're going to focus more on margins versus growth, which basically is telling investors we're not going to grow that much this year. Don't expect it. And that's why PayPal was down 11%. AMD now down 3.3%. If guidance on the call is guiding for a year of transformation, you know, and the way they're using transformation is not really bullish, then I don't know, this could get uglier. This could get uglier. AMD's margins are 26%, NVIDIA 70%. That is also correct. AMD's margins are significantly worse than NVIDIA's. But still, dude, sentiment on the stock was so bad for the past couple of months. It's not like it has gotten any lift. The only reason NVIDIA got bad with sentiment was because of DeepSeek. It would never have to do with AMD or supply bottlenecks or anything like that, supply chain bottlenecks. It always had to do with this random DeepSeek thing that happened that most people, including myself, think is nothing. AMD missing on data center. Like if NVIDIA misses on data centers in Q4, NVIDIA is going below 100. Like you can't miss on data centers, not when you're NVIDIA. If you're AMD, you also can't miss on that, but you don't have to grow as much as NVIDIA, but you definitely can miss. And I think that would be my explanation for why the stock's down 3.5%. Rango says the funny part is AMD is selling GPUs for cheap and still can't compete with NVIDIA. Well, wasn't that the other thesis that people had for NVIDIA, which is that it's the winner in the race, right? It's like you don't pick the second best. I mean, that's a thesis I heard by a lot of people that were just choosing to stay out of AMD, which is that, look, we're just going to go with the winner. That wasn't really my thesis. My thesis was just like, I don't know, I feel like I understand NVIDIA a little bit more. Granted, I've never done the due diligence on AMD, so I can't really speak to it, but I guess implicitly in my head as well, my dollars decided to go to NVIDIA over AMD because it was just like, okay, it's NVIDIA versus it's AMD. AMD right here down 3.7%, not getting a recovery. Google down 7%. Google as well, not getting too much of a recovery. Let's go back to Google's call and let me try to get a little bit more updates in terms of what's happening here. By the way, Figure, OpenAI, Figure is a humanoid robotics company that's competing with Tesla in the overall humanoid sector. They cut off their relationship today with OpenAI. Cut it off. Done. Brett Adcock, CEO of the company, tweeted today that they've made some new breakthroughs in the past 30 days that they're going to show off very soon. In-house, they didn't need OpenAI, and they're done with their collaborative agreement that they signed back when they raised their Series B, which tells me no one trusts Sam Altman, number one. Number two, if Brett went to another large language model provider and was like, hey, can you plug this into our robots? And then it worked better than GPT or it worked just as good as GPT, he probably realized, why the hell do I need GPT? Why the hell do I need OpenAI? So it's one thing to think about as well when we talk about robotics and OpenAI in terms of having a moat. Very interesting that Figure decides they're not going to be working with them today. Revenue on Google, $96 billion for the year, $350 billion in revenue. Wow, $350 billion. Unbelievable. Just amazing. Operating margins were 32%. Net income, $100 billion for the year. That means they are doing $25 billion a quarter. That is absolutely incredible. $100 billion in profits. Obviously, that can be used to do things like buying back their stock. So Google Services was $2 billion in profits. Cloud was okay. So they lost money on cloud, but I think that's a one-time expense, if I'm not wrong. No. Sorry. I'm looking at other bets. Other bets they lost 1.1 billion. Cloud they made 2.0 billion in profits, and then advertising they made 32 billion. So you had about 30 billion of total income. Dividend program, they paid out their dividend, which is I believe 50 cents, so 2.4 billion for the quarter, and then buybacks. They definitely bought back their stock this quarter as well. Repurchases, they bought back for the year 62 billion. If I'm not wrong, is that correct? 62 billion. And in the last quarter, they bought back 15 billion. 15.5. So they bought back 62 for the year, 15.5 in quarter four. That's what you got on Google. Is AMD coming back? AMD still red, and we got a little bit of a bottom at 114. Google still continues to be red. Snapchat having the best day out of everyone. Yeah, literally out of everyone. FICO's down 3%. Chipotle's down 5%. Broadcom's up 4%. NVIDIA's up 1%. Snapchat up 12.5%. Google down 6%. AMD still down 3%. Slightly holding 115. And then Enphase as well, up 8% on the day. Bitcoin's crashing. Why is Bitcoin crashing? Of course, Bitcoin would be crashing. Why is it crashing? David Sachs had some stuff to say about Bitcoin. He basically said strategic Bitcoin reserve is likely going to happen. He didn't give us a timeline, but he said, look, we're working on making it happen. Bitcoin is down 3%. Does anyone know why? Why is Bitcoin down 3%? Did China give us some new tariffs or something? I don't know. 24.5 price earnings for forward PE is still high for AMD. Yeah, I think it's a little bit cheaper on NVIDIA. So that's a fair point. I don't know. Oh, VSOP, I was about to read this comment as if you were serious. Bitcoin missed on data center revenue. Well, I mean, I guess so. That's weird. Why are we down 2%? That was weird. Bitcoin was pumping today. It was at 102. I don't know why that's happening. Palantir is down about 1% after hours. Netflix is down 0.5%. AMD still down 3.1. Grab's down 0.5% at 508. We did close above 511 or at 511 for Grab. HIMS was at 41.85. That was up 8% of the day. PayPal, nasty day, down 13%. Meta 704, that's down a little bit. Hood's down a little bit after hours. NVIDIA still holding. NVIDIA's up 1%. It's not giving that away. SOFI's down 0.5%. S&P's down 1/3%. Tesla's down 0.5%. Big story is Google down 6.7, Snapchat up 12, AMD down 3 on the day. Well, there you go. Looks like Google and AMD were not going to be the winners today. It was going to end up being some of these other names, like Snapchat and Enphase, that got love. Now, for Google, it's not that surprising, dude. It's really not that surprising. Google was trading at all-time highs. Like, you would expect a little bit of volatility, and you got it. There you go. And if you're going to spend $75 billion in capex, yeah, you'll take a hit. The street knows that, and that's okay. I don't know if the price gets the price hasn't gotten egregious on Google. Like when Meta fell from 450 to 395 in February because of increased capex, that was stupid. But Google, I mean, look, I like it at 190, but being stupid would get closer to like 165, 170. You know, it would be a little bit more stupid there, and it's not having that type of a reaction, which it shouldn't. It shouldn't have that type of reaction. So it makes sense that Google's selling off, but not selling off as aggressively as we thought before. Amit, do you still have PayPal? No, I got out of PayPal a while ago. I had some options. I was underwater on them. It was like, I don't know, it was like $5-6 grand. So I got out of that in like summer of 2024. But I don't think PayPal is a horrible stock right now. They're buying back 20 billion out of the 80 billion in market cap. However, Alex Chris said this year is not going to be a growth year. And as soon as you say that, people look to other opportunities where they can grow their money. And that's why I think we're seeing some pain on Google. Google call. Okay, so let me pull this up right here. Let me pull this up. Google call. Let's listen to a little bit of this right here. And then we will keep going from there. All right, here we go.
Product improvements and seeing terrific momentum with consumer and developer usage. And we are pushing the next frontiers from AI agents, reasoning and deep research to state-of-the-art video, quantum computing, and more. The company is in a great rhythm and cadence, building, testing, and launching products faster than ever before. This is translating into product usage, revenue growth, and results. In search, AI overviews are now available in more than 100 countries. They continue to drive higher satisfaction and search usage. Meanwhile, Circle to Search is now available on over 200 million Android devices. In cloud and YouTube, we said at the beginning of 2024 that we expected to exit the year at a combined annual revenue run rate of over $100 billion. We met that goal and ended the year at a run rate of $110 billion. We are set up well for continued growth. So today I'll provide an update on our AI progress and how it's improving our core consumer products. Then I'll touch on cloud, YouTube, platforms and devices, and Waymo. Let's start with AI. Last quarter, I outlined the 3 areas of our differentiated full-stack approach to AI innovation: our leading AI infrastructure, our world-class research, including models and tooling, and our products and platforms that bring these innovations to people at scale. First, AI infrastructure. Our sophisticated global network of cloud regions and data centers provides a powerful foundation for us and our customers, directly driving revenue. We have a unique advantage because we develop every component of our technology stack, including hardware, compilers, models, and products. This approach allows us to drive efficiencies at every level, from training and serving to developer productivity. In 2024, we broke ground on 11 new cloud regions and data center campuses in places like South Carolina, Indiana, Missouri, and around the world. We also announced plans for 7 new subsea cable projects, strengthening global connectivity. Our leading infrastructure is also among the world's most efficient. Google data centers deliver nearly 4 times more computing power per unit of electricity compared to just 5 years ago. These efficiencies, coupled with the scalability, cost, and performance we offer, are why organizations increasingly choose Google Cloud's platform. In fact, today, cloud customers consume more than 8 times the compute capacity for training and inferencing compared to 18 months ago. We'll continue to invest in our cloud business to ensure we can address the increase in customer demand. Second, world-class research, including models. In December, we unveiled Gemini 2.0, our most capable AI model yet, built for the agentic era. We launched an experimental version of Gemini 2.0 Flash, our workhorse model with low latency and enhanced performance. Flash has already rolled out to the Gemini app, and tomorrow we are making 2.0 Flash generally available for developers and customers, along with other model updates, so stay tuned. Late last year, we also debuted our experimental Gemini 2.0 Flash thinking model. The progress to scale thinking has been super fast, and the reviews so far have been extremely positive. We are working on even better thinking models and look forward to sharing those with the developer community soon. Gemini 2.0's advances in multimodality and native tool use enable us to build new agents that bring us closer to our vision of a universal assistant. One early example is deep research. It uses agentic capabilities to explore complex topics on your behalf and give key findings along with sources. It launched in Gemini Advanced in December and is rolling out to Android users all over the world. We are seeing great product momentum with our consumer Gemini app, which debuted on iOS last November. And we have opened up trusted tester access to a handful of research prototypes, including Project Mariner, which can understand and reason across information on a browser screen to complete tasks, and Project Astra. We expect to bring features from both to the Gemini app later this year. We're also excited by the progress of our video and image generation models. VO2, our state-of-the-art video generation model, and Imagen 3, our highest quality text-to-image model. These generative media models, as well as Gemini, consistently top industry leaderboards and score top marks across industry benchmarks. That's why more than 4.4 million developers are using our Gemini models today, double the number from just 6 months ago. And we continue to drive research breakthroughs in quantum computing. At the end of last year, we announced Willow, our new state-of-the-art quantum computing chip that can reduce errors exponentially as we scale up using more qubits. Willow is an important step in our journey to build a useful quantum computer with practical applications. This technology holds so much promise, which is why there was real excitement around this breakthrough. Third, our products and platforms put AI into the hands of billions of people around the world. We have 7 products and platforms with over 2 billion users, and all are using Gemini. That includes search, where Gemini is powering our AI overviews. People use search more with AI overviews, and usage growth increases over time as people learn that they can ask new types of questions. This behavior is even more pronounced with younger users who really appreciate the speed and efficiency of this new format. We are also pleased to see how Circle to Search is driving additional search use and opening up even more types of questions. This feature is also popular among younger users. Those who have tried Circle to Search before now use it to start more than 10% of their searches. As AI continues to expand the universe of queries that people can ask, 2025 is going to be one of the biggest years for search innovation yet. Now, let me turn to key highlights from the quarter across cloud, YouTube, platforms and devices, and Waymo. First, Google Cloud. Our AI-powered cloud offerings enabled us to win customers such as Mercedes-Benz, Mercado Libre, and Servier. In 2024, the number of first-time commitments more than doubled compared to 2023. We also deepened customer relationships. Last year, we closed several strategic deals over $1 billion, and the number of deals over $250 million doubled from the prior year. Our partners are further accelerating our growth, with customers purchasing billions of dollars of solutions through our cloud marketplace. We continue to see strong growth across our broad portfolio of AI-powered cloud solutions. It begins with our AI hypercomputer, which delivers leading performance and cost across both GPUs and TPUs. These advantages help Citadel with modeling markets and training and enabled Wayfair to modernize its platform, improving performance and scalability by nearly 25%. In Q4, we saw strong uptake of Trillium, our 6th generation TPU, which delivers 4 times better training performance and 3 times greater inference throughput compared to the previous generation. We also continue our strong relationship with NVDA. We recently delivered their H200-based platforms to customers, and just last week, we were the first to announce a customer running on the highly anticipated Blackwell platform. Our AI developer platform, Vertex AI, saw a 5x increase in customers year over year, with brands like Mondelez International and WPP building new applications and benefiting from our 200-plus foundation models. Vertex usage increased 20x during 2024, with particularly strong developer adoption of Gemini Flash, Gemini 2.0, Imagen 3, and most recently, VO. We're also seeing strong growth in our AI-powered databases, data analytics, and cybersecurity platforms. Customers, including Radisson Hotels, are now using Gemini to search and analyze multimodal data from across multiple clouds. Our AI-powered threat intelligence and security operations products help customers, including Vodafone and AstraZeneca, identify, protect, and defend against threats. Our growing portfolio of AI applications is also seeing strong customer adoption. In Q4, we introduced Google Agent Space, which helps enterprises synthesize data with Google Quality Search, create Gemini-powered agents, and automate transactions for employees. In addition, we recently gave all Google Workspace business and enterprise customers access to all of our powerful Gemini AI capabilities to help boost their productivity. Moving to YouTube. Nielsen data shows YouTube continues to be number 1 in streaming watch time in the US, with our share of streaming now at a record high. On election day alone, over 45 million viewers across the US watched election-related content on YouTube. Our early investment in podcasts is paying off. We integrated podcasts into the core YouTube experience, particularly with video. We are now the most frequently used service for consuming podcasts in the US, according to a recent Edison report. This success reflects our long-term approach of investing in emerging trends from mobile to the living room. We now have over 250,000 creators in the YouTube Shopping Affiliate program in the US and Korea alone. We expand YouTube Shopping at the end of last year to 3 additional countries, allowing even more creators to share their favorite products with fans and grow their businesses. Philip will talk more about YouTube performance later in the call. Next, platforms and devices. Google One's performance has been outstanding and is one of our fastest growing subscription products in terms of subscribers and revenue growth. Last month, we announced the first beta of Android 16, plus new Android updates, including a deeper Gemini integration, coming to the new Samsung Galaxy S25 series. We also recently announced Android XR, the first Android platform built for the Gemini era. Created with Samsung and Qualcomm, Android XR is designed to power an ecosystem of next-generation extended reality devices like headsets and glasses. Finally, a few words on Waymo, which made tremendous progress last year, safely serving more than 4 million passenger trips. It's now averaging over 150,000 trips each week and growing. Looking ahead, Waymo will be expanding its network and operations partnerships to open up new markets, including Austin and Atlanta this year and Miami next year. And in the coming weeks, Waymo One vehicles will arrive in Tokyo for their first international road trip. We are also developing the 6th generation Waymo driver, which will significantly lower hardware costs. I want to thank our employees around the world for another great quarter. 2025 is going to be exciting, and we are all ready for it. Philip, I'll hand it over to you.
Thanks, Sundar, and hello, everyone. I'll quickly cover performance for the quarter, then frame the rest of my remarks around the progress we're delivering across search, ads, YouTube, and partnerships, highlighting the impact AI is having on our business and our customers. Google Services revenues were $84 billion for the quarter, up 10%, driven primarily by 11% year-on-year growth in advertising revenues. Strong growth in search and YouTube advertising was partially offset by year-on-year decline in network revenues. In terms of vertical performance, the 13% increase in search and other revenues was led by financial services, followed by retail. The 14% growth in YouTube advertising revenues was driven by strong spend on US election advertising, with combined spend from both parties almost doubling from what we saw in the 2020 elections. Now, in Q4, we saw continued strong growth in revenues from search. We had lots of exciting updates in December, and we're rapidly integrating our AI innovation into our consumer experiences. We've already started testing Gemini 2.0 and AI overviews and plan to roll it out more broadly later in the year. In search, we're seeing people increasingly ask entirely new questions using their voice, camera, or in ways that were not possible before, like with Circle to Search. We're making these benefits available to more consumers. Google is already present in over half of journeys where a new brand, product, or retailer are discovered. By offering new ways for people to search, we're expanding commercial opportunities for our advertisers. Shoppers can now take a photo of a product and, using Lens, quickly find information about the product, reviews, similar products, and where they can get it for a great price. Lens is used for over 20 billion visual search queries every month, and the majority of these searches are incremental. Retail was particularly strong this holiday season, especially on Black Friday and Cyber Monday, which each generated over $1 billion in ad revenue. Interestingly, despite the US holiday shopping season being the shortest since 2019, retail sales began much earlier in October, causing the season to extend longer than anticipated. People shop more than 1 billion times a day across Google. Last quarter, we introduced a reinvented Google shopping experience, rebuilt from the ground up with AI. This December saw roughly 13% more daily active users on Google Shopping in the US compared to the same period in 2023. Closing out on search with travel and sharing another interesting trend where we saw spend expand to Travel Tuesday. This contributed to 20% year-on-year revenue growth for travel advertisers across Cyber Monday and Travel Tuesday. Moving to ads. We continue investing in AI capabilities across media buying, creative, and measurement. As I've said before, we believe that AI will revolutionize every part of the marketing value chain. And over the past quarter, we've seen how our customers are increasingly focusing on optimizing their use of AI. As an example, Petco used demand gen campaigns across targeting, creative generation, and bidding to find new pet parent audiences across YouTube. They achieved a 275% higher return on ad spend and a 74% higher click-through rate than their social benchmarks. On media buying, we made YouTube Select Creator Takeovers generally available in the US and will be expanding to more markets this year. Creators know their audience the best, and creator takeovers help businesses connect with consumers through authentic and relevant content. Looking at creative, we introduced new controls and made reporting easier in PMax, helping customers better understand and reinvest into their best performing assets. Using asset generation in PMax, Event Ticket Center achieved a 5 times increase in production of creative assets, saving time and effort. They also increased conversions by 300% compared to the previous period when they used manual assets. And finally, measurement. Last week, we made Meridian, our marketing mix model, generally available for customers, helping more businesses reinvest into creative and media buying strategies that they know work. Based on a Nielsen meta-analysis of marketing mix models, on average, Google AI-powered video campaigns on YouTube deliver 17% higher return on advertising spend than manual campaigns. Turning to YouTube, we saw robust revenue growth backed by continued growth in watch time across ad-supported and premium experiences. Our focus here remains on building a streaming platform that enables creators to thrive and unlock the full potential of AI. Expanding on our state-of-the-art video generation model, we announced VO2, which creates incredibly high-quality video in a wide range of subjects and styles. It's been inspiring to see how people are experimenting with it. We'll make it available to creators on YouTube in the coming months. We continue to invest in helping YouTube creators work with brands. All advertisers globally can now promote YouTube creator videos in ad campaigns across all AI-powered campaign types in Google Ads. And creators can tag partners in their brand videos. Sephora used Demand Gen's Shorts-only channel to boost traffic and brand searches for their holiday gift guide campaign and leveraged creator collaborations to find the best gift. This drove an 82% relative uplift in searches for Sephora Holiday. Shorts continues its ascent and is closing the gap with long form. In 2024, the monetization rate of shorts relative to in-stream viewing increased by more than 30 percentage points in the US, and we expect to make additional progress in 2025. We're making it easier for advertisers to benefit from shorts on all screens. We're particularly excited by its success on connected TV, which now makes up 15% of shorts viewing in the US. Using a combination of ad formats, Louis Vuitton reached their overall objectives on both long-form and short-form content. Their shorts exceeded the luxury goods benchmark for average view duration by 89% for equivalent video lengths, while their long-form content exceeded the benchmark by over 15%, with strong engagement from Gen Z and millennials. Looking into the living room, we continue to be #1 in streaming watch time in the US for nearly 2 years, according to Nielsen, and our share of streaming is at a record high. Viewers globally streamed over 1 billion hours of YouTube content daily on their TVs in 2024. YouTube makes multi-year investments to tap into shifting consumer behavior. The current surge in living room viewership directly reflects years of work to build the right products and partnerships. Creators are now prioritizing high-quality viewing experiences that truly shine on TV screens, inspiring even more viewers to tune in. In fact, the number of creators making a majority of revenue from TV is up over 30% year on year. We have also invested in podcasts, where popular shows like Club Shay Shay and Lex Friedman are increasingly a visual format. YouTube creators and viewers are embracing this. In 2024, people watched over 400 million hours of podcasts each month on living room devices alone. YouTube is now the most popular service for podcast listening in the US, according to Edison. As always, let me wrap with the strong momentum we're seeing in partnerships, where the breadth of what Google has to offer is increasingly being recognized. Sundar mentioned our deepening partnership with Samsung. Another expanding partnership is with Citi, who's modernizing its technology infrastructure with Google Cloud to transform employee and customer experiences. Using Google Cloud, it will improve its digital products, streamline employee workflows, and use advanced high-performance computing to enable millions of daily computations. This partnership also fuels Citi's generative AI initiatives across customer service, document summarization, and search to reduce manual processing. With that, allow me a moment to thank Googlers everywhere for their extraordinary commitment, and to our customers and partners for their continued trust. Anat, over to you.
Thank you, Philip.
Okay, we're not listening to that. We're not listening to the CFO say the same numbers. Jason, are you there? I can get you on right now. And we can go back to Google when they get back to questions. I'll see when they go back to Sundar. But we are not listening to the CFO recite the same. After Palantir's earnings, we can't do this. Dude. This is they set the bar too high. We are not listening to them read off a PowerPoint. Jason.
Yo. Oh, what's up, man?
How are you doing? Oh, I didn't roll the intro. Hold on. Go back.
No. It's all good. It's all good. It's good. We don't need an intro. We don't need an intro today. Dude, congrats, though, man. That's what a quarter from Palantir. I mean, that's insane.
It was a hell of a quarter. And guys, by the way, I have Google on my other screen. As soon as they go back to Sundar, I'll see, and then we'll go back to the call, and Jason will just be with us to hear it.
Intro. No.
Yeah, for those that are new here, we always have an intro for Jason. Yeah, dude, Palantir. I mean, what was your raw reaction to it? What did you think?
I am not Korean, guys. What? They did that on purpose, man. They did that on purpose. No, I mean, so I was thinking 100 anyways, but I'm like, I'm not necessarily going to trade to 100 because I did take a trade. And I texted you. I texted Amit, you guys. I was like, would you believe me if I told you that Palantir options were underpriced? And he's like, I actually would. And they were. But I just took a straddle. I also took one on Snapchat today too. So for me I'm looking for them to probably move a little bit more. But we'll see.
So you're Singaporean if you're not Korean then.
Dude. I mean, I'll be Singaporean for a while because Grab had an amazing day, by the way.
Yeah.
I mean, that what is it? We were like 10% up in the last couple.
12% in a day. Yeah, it was awesome.
In a day?
Yeah.
Was that all today?
All today, dude. All of it.
Oh, whoa. Yeah. Well, that was a good one. We did catch that for sure. But yeah, I mean, this is, we talked about last week. I said, I think we're in the chop. We're in the heat of earnings season. This is the chop. So welcome to the chop for sure.
So let me ask you this question as we wait for the Q&A on Google. I mean, you're looking at the stock down 7%. This has never been your favorite stock.
Google?
However,
Dude.
yeah.
I mean,
However,
they missed, man. They missed. What can I say? They missed on cloud, right? Like, and
so you think it's justified?
Oh, for sure. I mean, well, so I do think it's justified. I did not take a trade on Google because that one actually looked like it was a little underpriced. But I mean, okay, 70-something billion capex. That's cool. Cool for NVIDIA. Cool for
really
the semis.
cool. That's cool for
Very
us.
cool. Yeah. I think the question that you have to ask yourself, right, is like, do you really believe in the management team? That's it. And you know, I'm disappointed as a huge Google. Yeah. So I think that the bull case. Here's the thing.
By the way, I'm beneficial as the biggest Google bull in my chat. So if he's disappointed, there's an issue.
So I haven't seen the graphs and the charts that come out after the calls, but like, you know, the bull case for Google has always been, to me, in my mind, GCP, right? And GCP has been doing incrementally better over the years. And I know like Sam and them, was it Sam? Might not have been Sam, might have been Chris, or like, you know, GCP is like the one piece that's like really possible, you know, free call option, if you will. Yeah. And I agree. But the problem is that they've been executing on from a GCP perspective, to me, for a long time. And it sounds like they're not anymore. I mean, executing in terms of like they're still growing. They have, and this remains a fact, that they have the most room to grow in the cloud space because they are the smallest of the big three, meaning like AWS from Amazon, Microsoft Azure, and then Google GCP. So GCP is by far and away the smallest. I mean, it's not like it's like Baba Cloud or something, which exists, but and it's not like IBM or Oracle even, but like it should. GCP has the potential to be something really freaking great, and it's just unfortunate that they're not making it into that really amazing thing, right? Like GCP is there. It should be this shining star that like outshines everything else at Google, but it's just not.
But it was only a $20 million miss, right? I mean, like, are we?
It doesn't matter, dude. It's a miss, right?
No.
Like, no. Does AMD have a call?
Yeah, but guys, we're not doing the AMD call. If you want to do the AMD call, you can go to a different.
I mean, it's not a Lisa fan.
No, it's not even that. It's just like I can't manage Technical Tuesday, Google, and AMD. Like we got to make a trade off, right? And so
we can watch some calls, dude. I mean,
also AMD's call is boring, bro. So I listened to it a year ago. It was not fun.
So Sundar needs to be fired.
What do you guys want to hear? They missed on data. Or what's your thoughts on data center, dude? They missed on that. How do you interpret it?
I mean, that's huge. That's a big deal, right? It's. I think, like your guys are saying, it's a disappointment. It's a disappointment because there's so much potential there, but yet there's still, after, I don't know, 5-10 years of having this thing out there in the ether, just not being able to really get the traction. So maybe one day they get it, but it's just that, you know, like they've been trying for so long and they've just yet to do it. I was, you know, this is a different CFO, I believe, right now.
What, on AMD?
No, Google.
Oh, Google. Yeah. It's different. It's new.
So we didn't have that old CFO that would just like, I feel like she would like intentionally shellac the stock, but yeah, I mean, just the same. It's, you know what, price action is not horrendous. I saw like one. It's not horrendous because, you know, if you look at it and here's, you take it with a grain of salt. Yes, it's disappointing, but look, Google's been trading at $190 all year long.
And real quick, Jason, before you continue, for those that do want to listen to AMD, again, it's just, we have to make trade-offs here with Google, Technical Tuesday, all that stuff. Here you go. You can click that link right there. You can leave this stream. This channel is streaming it live. So if you want to watch AMD, you can click on that stream right there.
Yeah. So, I mean, so my point is that Google hasn't really lost any momentum per se. It hasn't gained any either. So it's just very much stuck in the mud here. Well, I don't know that the thesis is broken per se, but what's true is that they just didn't execute this quarter.
Yeah, and I need to go further through the quarter to say if I agree with you that they didn't execute. But like
the street's not what's the word I'm looking for?
Impressed, but
Yeah.
the stock was at all-time highs going into the print. Like that's also a tough bar, right?
It's yeah. I mean, it's came in hot, right? It's pulling back. We're in the chop, man. I think we're in the chop. It's January, or no, it's not January anymore. It's barely February. So I mean, you still got the whole year to really kind of get some traction here. I'm sure there will be other things. Is this something I would throw the stock away on? No, right? But is this weakness? I think that's the question. Is it weakness that I would buy? And my answer right now is no. Does that make sense?
Why?
I mean, it's just because it's more of the same to me, right? So like I would want a little bit more of a discount on Google. Like if I saw Google 175s like all day long, right? I'll go ahead and pick that up. But Google here again, it's not like I'm getting a discount from the last 2 months because it's been at, look, it was at 190. It was literally here on the 28th of last Tuesday. So like it's not like it's really gone a whole lot. It was the same price it is last Tuesday right now.
Let me ask you this question. Everyone in the chat, or I've seen a decent number of comments say Sundar's got to go. What are your thoughts on that?
I mean, have I said it on your stream before? Yes.
Google's really dropping right now, guys. 8%. She just said CapEx. I can see in the transcript. The street already knew what the number was, but I guess now that she's saying it, you're really seeing the decline. But okay, tell me why Sundar needs to go.
I just think it's the leadership, right? It's like it's not. He's in charge of leading the whole team, right? The corporate mission, the visionary, the guy that puts the teams together. So it might not be like, oh, he's not executing on GCP, but he has failed to put the correct team in place to really take a hold of GCP. And I think that's it, right? He's accountable to the teams. So
you don't like Browns, is what you're saying.
I don't have dude. Most of my friends are brown, or not most, like a lot. I have a lot of brown friends. You'd be surprised, but I'm trying to think. Is that true? Like, I'm pretty sure it's true. I have a good amount.
No, I feel you do. People don't say this about Nadella ever, but they say it about Sundar a lot, and I hear it all the time that he's got issues. I don't know.
Yeah, new lows here, 188. So they're coming in. And again, yeah, I think this one is one that you let the dust settle. You let the dust settle. You play the 3-day rule out, and you see where it goes from there. Because it might take a while. So something like this happens. You usually get like a solid month almost of going sideways.
So ironically, I sold my 50 shares of Google at 196 Sunday night because I thought we were going to launch a tariff war. And then I kept it in cash, and then no tariff wars. So, but it was a good move, unironically, for a different reason. I do have some covered calls on Google, so that should print tomorrow, which is nice. But
wait, that means that you have hundreds of shares also.
No, so I have 2 calls, right, that are covered 150, but my strike is at 225. So
got it.
I think so. I need them to be 210 by January. I think Google's at $210 by January 2026, but.
I mean, it was already today, right?
Yeah, this is why I'm thinking. I don't think this is a bearish quarter.
No, so I'm not saying. So, like I said, it was literally here like Tuesday, and you're just now coming into the 50-day SMA. So, right now, I'm looking at 185 as a pretty key level. I think if you get to 185 and then you start to bounce, you might. So at that point, do you want me to share?
Actually, we got Q&A. So we will get right back to Technical Tuesday in about 25 minutes. Here's Google's Q4 Q&A.
I'm muting now.
And you will need to press *1 on your telephone to prevent any background.
Thanks for taking my questions. I have 2, one for Sundar, one for Anat. Sundar, maybe kind of step back on search. It seems like there's a lot of advances to come with Gen AI and agentic possibilities with search. Can you just sort of walk us through your big picture vision over the next few years of how you think about your search product continue to evolve to stay at the top of the funnel and drive more engagement and monetization for your users and advertisers? And then the second one, Anat, I think about 90 days ago, you talked about sort of further efficiencies and areas of simplification on the OpEx space. Can you just sort of walk us through some examples of where you see the potential for further efficiencies to the OpEx space, excluding the DNA step-ups that we have to come in 2025? Thanks.
Thanks, Brian. On search, obviously, we view. This has been a long, continual journey. AI overviews has been the next step. It's playing out positively, as we have indicated. The metrics look great, and we are obviously trading on that experience, bringing better and better models, expanding to the number of queries where it works, and so on. But there's a lot more to come. I think we'll continue bringing AI in more powerful ways, in multimodal ways. Things like what we have done with Lens Circle to Search. You can imagine the future with Project Astra. You can also imagine areas like we have done in Gemini Deep Research, possibilities where, you are really dramatically expanding the types of use cases for which search can work, things which don't always get answered instantaneously, but can take some time to answer. Those are all areas of explorations, and you will see us, putting newer experiences in front of users through the course of 2025. And so I do feel the opportunity space with AI, there's a lot of unlock ahead.
Thanks. And for the question with regards to where do I see leverage moving forward, and some of the comments I've made on the previous call, I certainly see opportunities for further productivity and efficiency, and this is one of our priority areas. And we're going to do that so that we can make sure we continue to invest in areas such as AI and cloud, where we see potential for continued growth. I'll remain focused on areas that I've mentioned before, which include the technical infrastructure. So the $75 billion in CapEx I mentioned for this year, the majority of that is going to go towards our technical infrastructure, which includes servers and data centers. So ensuring we do that in the most efficient way is critical. Second is managing headcount growth, and we're going to be investing in areas of growth such as AI and cloud, but looking across the organization and moderating that growth will be important. Optimizing the real estate footprint is one of the areas I've mentioned. We're continuing to focus on that, as well as looking at how we simplify the organization. We previously mentioned bringing like areas together. Sundar talked about bringing some of the AI research teams together so that we can operate with increased speed, but also how we operate within the organization, using our own AI tools to how you run the business. Whether it's the code that Sundar mentioned on the previous call, writing code with AI, or even running some of our key processes using AI tools. So we're looking at all that. This is not a one quarter type of effort. It's going to continue throughout the year, and we're going to continue to focus on that so that we can support the growth in other areas.
Our next question comes from Doug Anmuth with JP Morgan. Your line is now open.
Thanks for taking the questions. One for Philip and one for Anat. Philip, can you just talk more about the expanded rollout of ads on AI overviews, and perhaps what additional things you may have learned in 4Q? And I guess in particular, just curious if you rolled out to a higher percentage of commercial queries, and is it still fair to say that you're monetizing nearly on par with existing search? And then Anat, just on cloud growth, a little bit of decel 3Q to 4Q, but it sounded like you also suggested that you were capacity constrained in the fourth quarter. I just wanted to push on that a little bit more. How is that accurate, and is it fair to say that revenue growth could have been higher with much more capacity? Thanks.
So on your first question, first of all, AI overviews, which is really nice to see, continue to drive higher satisfaction and search usage. So that's really good. And as you know, we recently launched the ads within AI overviews on mobile in the US, which builds on our previous rollout of ads above and below. And as I talked about before, for the AI overviews overall, we actually see monetization at approximately the same rate, which I think really gives us a strong base on which we can innovate even more.
On the cloud question, so first, I'm excited that we ended the quarter at $12 billion and a 30% year-over-year growth, very impressive growth. And as I've mentioned, the prepared remark, GCP grew at a much higher rate than overall cloud. Two items to think about from a deceleration perspective. The first is we are lapping a very strong quarter of an AI deployment in Q4 of 2023. The second is the one you've alluded to. We do see and have been seeing very strong demand for our AI products in the fourth quarter in 2024. And we exited the year with more demand than we had available capacity. So we are in a tight supply-demand situation, working very hard to bring more capacity online. As I mentioned, we've increased investment in CapEx in 2024, continue to increase in 2025, and we'll bring more capacity throughout the year.
Thank you both.
Your next question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thank you for taking the question. I'll just ask one. Sundar, with the news that came out of China a little over 2 weeks ago, I think investors have been asking a lot of questions about the long-term cost curve for AI as AI moves from the infrastructure layer to the application layer, or from training to inference, and maybe even custom silicon becomes more dominant across the theme. I would love to get your perspective on your take on that news a couple of weeks ago and what it might mean for Alphabet longer term. Thank you.
Thanks, Eric. Look, I think there's been a lot of observations on DeepSeek. First of all, I think tremendous team. I think they've done very, very good work. Look, I think for us, it's always been obvious, over time, there's frontier model development, but, you can drive a lot of efficiency to serve these models really, really well. And if you look at, one of the areas in which the Gemini models shine is the Pareto frontier of cost, performance, and latency. And if you look at all three attributes, I think we lead this Pareto frontier. And I would say both our 2.0 Flash models or 2.0 Flash thinking models, they are some of the most efficient models out there, including comparing to DeepSeek's V3 and R1. And I think a lot of it is our strength of the full stack development, end-to-end optimization, our obsession with cost per query, all of that, I think sets us up well for the workloads ahead, both to serve billions of users across our products and on the cloud side. A couple of things I would say are, if you look at the trajectory over the past 3 years, the proportion of the spend towards inference compared to training has been increasing, which is good because, obviously inference is to support businesses with good ROIC. And so I think that trend is good. I think the reasoning models, if anything, accelerates that trend because, it's obviously scaling upon inference dimension as well. And so I think we, part of the reason we are so excited about the AI opportunity is we know we can drive extraordinary use cases because the cost of actually using it is going to keep coming down, which will make more use cases feasible. And that's the opportunity space. It's as big as it comes. And that's why you're seeing us invest to meet that moment.
Thank you.
Your next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thank you. I have two, one for Philip and one from Anat. Philip, question for you is, we're starting to see more AI tools on e-commerce sites, and something like research with AI recommendations is on Google Shopping. Can you talk about how that product and other AI tools are impacting shopping behavior, and how that's impacting monetization? And then I guess the $75 billion question, Anat, is how do you think about long-term capital intensity for this business? It sounds like there's a bit of constraint in terms of getting things built, but how do you think about the modeling of capital intensity going forward? And what are the things that you're looking forward to in terms of whether or not this is the right level of spend? Thank you.
Look, excellent question. We've been using our advances in AI to make search for products on Google even easier, obviously. And in Q4, we actually introduced quite a transformed Google shopping experience, which we rebuilt from the ground up with AI. And people shop more than 1 billion times a day across Google. Last quarter, we introduced this fully reinvented Google shopping experience. In December, we saw roughly, I mentioned this, 13% more daily active users on Google Shopping in the US compared to the same period last year. So that's a good development here. And the new Google Shopping experiences, specifically to your question, uses AI to really intelligently show the most relevant products, helping to speed up and simplify your research. You get an AI-generated brief with top things to consider for your search, plus maybe products that meet your needs. So shoppers very often want low prices. So the new page not only includes like deal finding tools like price comparison, price insights, price tracking throughout, but it's also a new and dedicated personalized deals page where you can browse deals for you. And all this is really built on the backbone of AI. So we think this is a very interesting opportunity.
And on the question of capital expenditure, and I think you may have two questions in there. One is just the capital intensity, and then how would we think about return on that invested capital? So on the first one, certainly we're looking ahead, but we're managing very responsibly with a very rigorous, even internal governance process, looking at how do we allocate the capacity and what would we need to support the customer demand externally, but also across the Google, the Alphabet business. And as you've seen in the comment I've just made on cloud, we do have demand that exceeds our available capacity. So we'll be working hard to address that and make sure we bring more capacity online. We do have the benefit of having a very broad business, and we can repurpose capacity, whether it's through Google Services or Google Cloud, to support, as I said, whether it's search or GDM or Google Cloud customers. We can do that in a more efficient manner. We also look at every investment that we make to ensure that we're doing it in the most cost-efficient way to optimize our data center. As you know, our strategy is mostly to rely on our own self-design and build data centers. So they're industry-leading in terms of both cost and power efficiency at scale. We have our own customized TPUs. They're customized for our own workloads, so they do deliver outstanding superior performance and CapEx efficiency. So we're going to be looking at all that when we make decisions as to how we're going to progress capital investments throughout the coming years.
Thank you.
Your next question comes from Mark Shmulik with Bernstein. Your line is now open.
Yes, thanks for taking the question. Sundar, I just wanted to follow up to Brian's question from earlier. You know, with your own Project Mariner efforts and a competitor's recent launch, seems there's suddenly really strong momentum on AI consumer agents and kind of catching up to that old Google duplex vision. I think when you look a few years ahead, where do you see consumer agents going? And really, what does it mean to Google search outside of Lens? Is there room for both to flourish, or will they eventually be in conflict with each other? Thank you.
Now, look, I think, first of all, we are definitely seeing a lot of progress in the underlying capabilities of these models. Gemini 2.0 was definitely built with the view of enabling more agentic use cases. And so, I actually, and we are definitely seeing progress inside, and I think we'll be able to do more agentic experiences for our users. Look, I actually think all of this expands the opportunity space. I think, historically, we've had information use cases, but now you can act on your information needs in a much deeper way. It's always been our vision when we have talked about Google Assistant, et cetera. So I think the opportunity space expands. I think there's plenty of, it feels very far from a zero-sum game. There's plenty of room, I think, for many new types of use cases to flourish. And I think for us, we have a clear sense of additional use cases we can start to tackle for our users in Google Search. And all the early work with AI overview shows that users will react positively to that. So, I'm pretty excited about what's ahead.
Your next question comes from Ross Sandler with Barclays. Your line is now open.
Great. One on infrastructure and then one not on the guidance on revenue. So Sundar, if we look at the inference cost per 1 million tokens and not the API pricing we see for Gemini versus something like GPT-4, but the raw cost of generating inference tokens on your TPU stack, how much more efficient do you think you guys are in terms of generating 1 million tokens compared to inference costs running on your cloud peers? Do you see this as an advantage as everything shifts to inference? And then Anat, you called out lapping the financial services category strength in 2025 as a bit of a problem for search. Could you just quantify a little bit of that? Is that kind of the same as when you guys talk about lapping the Asia outbound advertiser channel? Any numbers you could put around that headwind? Thank you very much.
Ross, look, the whole TPU project started, our V1 was effectively an inferencing chip, so we've always, part of the reason we have taken the end-to-end stack approach is that so that we can definitely drive, a strong differentiation in end-to-end optimizing and not only on a cost, but on a latency basis and a performance basis. Be at the Pareto frontier we mentioned, and I think our full stack approach and our TPU efforts all play, give a meaningful advantage. And we plan, you already see that. I know you asked about the costs, but it's effectively captured. When we price outside, we pass on that differentiation. It's partly why we've been able to bring forward flash models at very attractive value props, which is what is driving both developer growth. We've doubled our developers to 4.4 million in just about 6 months. Vertex usage is up 20x last year. And so all of that is a direct result of that approach. And, we'll continue doing that.
And on the question regarding my comment on lapping the strength in financial services, so this is primarily related to the structural changes with regards to insurance. So it's more specifically within financial services, it was the insurance segment. And we saw that continue, but it was a one-time kind of a step up. And then we saw it throughout the year. I'm not going to give any specific numbers as to what we expect to see in 2025. But I'm pleased with the fact that we're seeing and continuing to see strength across really all verticals, and including retail, and exiting the year in a position of strength. If anything, I would highlight as you think about the year, the comments I've made about the impact of FX, as well as the fact that we have one less day of revenue in Q1.
Your next question comes from Justin Post with Bank of America. Your line is now open.
Great. Thank you. A couple for Philip. You mentioned higher search usage with overviews. Just wondering how you're feeling about overall search usage. Is it accelerating as you integrate more AI? I know there's a lot of traffic growth at competitors with AI, but just wondering if you're seeing a real increase in total volumes of information gathering. And then second on YouTube, thinking about kind of maybe a move from more professional content to user-generated content. What is that doing for your usage, and how do you think about the margin impact from that? Thank you.
Maybe Justin, on search usage overall, look, our metrics are healthy. We are continuing to see growth in search on a year-on-year basis in terms of overall usage. Of course, within that, AI overviews has seen stronger growth, particularly across all segments of users, including in younger users. So it's being well received. But overall, I think through this AI moment, I think search is continuing to perform well. And as I said earlier, we have a lot more innovations to come this year. I think the product will evolve even more. And I think as you make search, as you make it more easy for people to interact and ask follow-up questions, etc., I think we have an opportunity to drive further growth.
And some color on your YouTube question. Look, YouTube ads overall had a very healthy growth in Q4, driven by brand, followed by direct response. The US election advertising led brand revenue growth, and we saw nearly double the spending from 2020. I mentioned that. We also had a strong contribution from finance, retail, and the tech verticals. So overall, strong operating metrics. Watch time growth remains robust, particularly in key monetization opportunity areas such as Shorts and Living Room, just to set the stage here one more time. On your question specifically on the UGC side, look, we have a very strong position with creators, and we've always said creators are at the center of YouTube's success here. They're the number one most important thing we care about, and this strong position really gives us a lot of confidence here. Today, we have more than 3 million channels that are actually in the YouTube Partner Program, which is really an incredible program. So we're very confident with the position we have and where this goes.
All right, I think we end the Q&A there. I mean, there's not much more we're going to get out of that Q&A. If you guys still want to hear it, I'll put the link in the chat if you really want to hear the final 2 questions. But I think that's it. We're done.
We're done?
We're done, dude. I
mean,
honestly, dude,
it's not exciting, bro. I mean, I want it to be exciting, but
I'm actually falling. I barely slept last night. I'm like legit falling asleep right now listening to it. So we're done.
Well, hey, we can sit here on YouTube and maybe help Google out a little bit. and maybe that's the only bright spot here.
I do think this is not a bearish quarter, but that call, the excitement, the way he answered the search question.
Call Chris. Let's call Chris.
Chris is he said he woke up when he was sleeping. He saw the results, then he went back to sleep. So I doubt he's
sleeping right now.
And well, that's what he said.
I mean, even the Google investors aren't that exciting. They're sleeping. Come on.
I mean, we'll talk to him tomorrow on the show. We'll get his take on this. But
yeah, I mean, they're all like fucking AMD, man. I don't know, dude. So both of them. I mean, what were you expecting from AMD though? Like, I mean, that's the thing. Like, okay, I like AMD, or I like. Did you guys know? I mean, in all reality, AMD was like a $2 stock, like, I don't know, 10 years ago.
Don't tell Steve. Steve had thousands of shares and he sold it at like $3, $4.
Yeah, I mean, I had it at like $5. I sold it at like $10. So there's that. So I mean, all in all, I mean, this is investing, right? Like you're gonna have ups and you're gonna have downs, right? Like if you're trading, that's a little bit of a different deal, right? But I mean, it's a long game at the end of the day.
So we'll talk about Google, we'll talk about AMD, but I think we should start off Technical Tuesday with none other than Palantir.
Oh, Palantir. I mean, dude, did it close on its highs? Oh, pretty close to it, dude.
Real quick before we get started, for those that are new to the channel, 2 things. Number 1, this is Technical Tuesday. This is the part of the market close during the week where I bring on, in my opinion, the best TA person. What do you call yourself? A TA
technician?
Technician. The best technician in the stock market that I know of, Jason. So he comes on, blesses us for 3 hours, gives us a lot of good.
At least that you know personally, right? This has got to be true.
Yeah. I think I'll put you up with anyone I don't even know, just based on what you've shown me over the past couple of months. You were incredible.
Yeah.
And for those that want to follow him on Twitter to get more of his content, there's his Twitter right there. You can check him out in the description.
So I don't know that Palantir's done. I mean, first of all, dude, I was looking through this quarter and I'm like, okay, this is wild. So Palantir, 390 something customers on their commercial platform, right? And I'm like, yeah, it's evaluation is like, okay, that's nosebleed. But like, dude, if it's I'm seriously looking at this. I'm like, if it's trading here, and I gotta figure out what I posted, because like I was like, if it's trading here at that price, this is where it was, right? So like 382 customers. This is the metrics that we're looking at, right? From for AIP, right? Like just the commercial side. And I'm like, hold on. They only have 390 customers? I'm like, dude, how do they not end up in the Fortune 500? I don't don't know. So
So
like
they,
it's
so they only have 390 commercial. They have 700 in total. But to your
I
point,
know, but dude,
that
who
700 is
cares?
nothing. I get it. I get it.
That is this is literally nothing. I'm like, dude, I had more than 392 customers in IT, right? Like, I'm like, come on. But yeah, and then you see the note, right? You see the note from Carp, and they're like, this is what my shout out to you, right? But like, I remember watching this go down, and I'm like, okay, this is $5, $8 stock, and so was Robinhood at the time, and I'm like, I had a hard time coming from enterprise IT. I was Snowflake was one of my largest customers, right? But like, I had a hard time getting on the Carp wagon, dude, right? But like, you can just see in he's come so far, right? Because he literally was just like the crazy haired CEO on TV that would talk, and you'd be like, people like, I don't really know what he's talking about, and now it's like, holy shit, right? Like, it's happening.
Well, when the stock was $6, I think a lot of retail were enticed by his charisma and how he spoke to the world, and Wall Street was turned off by that. I mean, Jason, there was an analyst today on CNBC who said, I quote, Carp doesn't even respond to our investor emails.
I mean, no, I wouldn't put so like what I get here. So Carp he's not in it for like the grandiosity or any of that. He's the man of the people, dude.
Yeah, exactly.
And he's literally doing this because he wants to, as a mission for almost like the underdog, right? Like, I don't know. It was
well, that's my thing. The analyst
at the closing comments, right? When he had an opportunity to talk to the investors directly, you saw that, right? Like, he's like, this is my opportunity to talk to our investors, our Palantirians. And it was a whole nother Carp all of a sudden. I'm not talking to an analyst. I'm talking to my family.
Well, that's the thing. The analysts, and I've spoken to analysts before, they literally get wined and dined. And then after a good dinner, you buy them a $3,000 bottle
not
of wine.
by this guy.
Right. That's my point. Not by Palantir, right? But they get wined and dined. And then the next day, ironically, after a Sunday night wine and dine, Monday, we are raising our price target on blah, blah, blah. And Carp's just never played that game.
No, I don't. I don't know him. I honestly have not been on this bandwagon for, like you guys have been all over this, but I can see what people, this is just beyond. I can see what people are. I can see it now, right? So last time I said it was like 125. I don't see how we don't get there. So what this is right now is, if this whole thing, and I'm on a weekly scale at this point. So if this entire thing was a consolidation range, in technical analysis, what you would do is you would essentially take this whole box and kind of just like put it up here. And why is it's not jiving? One.
So you're saying we're going to 250? Is that what you're saying? Dude, the fact that we didn't even flinch
How is
today,
this happening? Like,
I mean, it's Carp. It's Carp and the company. It's the mission.
So extensions are literally right here, 110 to 123. But I mean, at this point, dude, so here, I don't think that really matters as much, because like, if you're going to sell Palantir, I think it's like this. If you're going to sell Palantir, I think you would have done it a long time ago. And at this point, it's basically, am I buying it back, or am I adding? I don't know that you're adding, but you're just riding the wave, and you're kind of like moving your stops up. So I don't think if you didn't sell already, then you're not going to sell. That's what's true.
Agreed.
Right? And so what I could do is say that 125 is still here. Normally, when we have this kind of earnings reaction, what I do is I take kind of like from the point where the market got the data right here, that's at $83. So the way this works typically, okay, at $83 and some odd cents, that's the point where the market received Palantir's numbers. jaw-dropping numbers, right? But and then today's high after that point, I'm going to kind of measure this. So at this point, what you know is that anything below $83.72, you are now discrediting this last quarter, and the market's essentially calling it bullshit.
Right.
Right. So that said, I don't know that necessarily happens, but there are a couple points that we can watch moving forward to say whether or not this is happening. And so for technical analysis, what's cool about this is like there's this you're trying to figure out what the market is calling, like is saying here. And the story would be, look, okay, if you pull back half of this move, that would be $95. And a discount to this move would be 92. But anything below 92, then you're going to pull back that move. And you know that whether or not, whatever you believe, the market is about to say, okay, we're not going to give you credit for this last quarter anymore. So, but that said, a healthy discount is somewhere below $95. So a healthy pullback from here is somewhere below $95. What I can do is I'll show you some examples of what that looks like. If I have, so here's Shopify. Shopify has earnings right here. And this is just always like a quick go-to. You have kind of like a breakout quarter. And the same exact exercise I'm going to do is you take from where the market got the data to
real quick, dude. AMD is at 109. It looks like their guidance was really bad. I'm going to try to get the numbers in a second, but yeah, it's getting hit.
So it might take a long time. So look at this. So Shopify still in this box, but a 50% pullback from that earnings candle typically ends up being a decent discount inside of that box. So for Palantir, and this is just what you would want that to look like. That means though that it goes sideways for a long time if you don't instantly break out. So I would expect something like that if it's not just like a full-blown like extension next week. I say next week, not this week. And that could look a little bit something like this, right? Eventually. So that's the digestion phase.
I think that makes a lot of sense. Two questions on this before we move on. Is 100 an emotional number? And do you think smart money is trying to get in right now?
I have this feeling where it's going to be like Bitcoin, right? Where it's going to hover around $100 for an extended period of time. It might get over and we might see like 110s and then it'll come back to 90s, just kind of like how I outlined. But I would assume that it'll be very similar to this kind of Bitcoin price action, right? Where you're up there. Now you've had this big move. Now it's massive digestion.
Right. Which is healthy, right? If we can digest 100.
I mean, so there's one big difference between this and like a Palantir, right? Is that there's no real earnings.
Wait, hold on. Bitcoin doesn't have free cash flow?
No, they make money. The miners make money. But there's not like earnings to deal with or like customer issues or insights, right? So like if Palantir starts getting some major contracts, that's going to change the game, right? So as long as the news flow and the contracts keep coming in, it might be a faster digestion than we would anticipate. But for now, I would put that sub $95 level in your mind. Protect against that if you want to. Again, not really one where I would necessarily sell upside calls unless you can get a lot of juice for them. And honestly, you'd have to pay me a lot, and I'd have to sell them like in the 120s.
Yeah, but the premium, dude, I checked today is insane on these calls already. Still.
So we do earnings trainings, right? Which, by the way, I'm going to do another one tomorrow. But or is it
like there are people ready to pay a ton of premium for 120, 130 strikes is my point. They're out there. I mean, 150 was paying 0.6% a month out. 150 is paying almost more than 0.5%. Like,
yeah, I mean, you got 10,000 volume today on the 110s.
Oh, of course you do. 10,000. I didn't even know that. Of course, 10,000 people traded the 110s. Like, it's just, there is liquidity in this options pool that is incredible. And it's because people are.
So I like this trade actually. But anyways, where I was going with this, when you have it and we do this on the earnings trainings, when you have an outsized move like this. So Palantir was pricing in, I have to pull it up. What did I say? I have to look at our text. I texted you.
Got a 17% move, I think. 778 million.
All I see is like these underwears.
Yeah, that's so out of context, bro. Oh my god. Like, this is like people are not gonna
it's just what showed up.
You're not helping my case here, bro. Every day.
Okay, hold on. So I'm just reading. This is gonna be too small. So like Palantir, it was gonna be a simple at the money straddle. So the average move is 17%. And the options market was pricing in 15%. So if this is the average move last quarter, 23, here 30%, 17 something. So we knew that you had a 77% chance of making money if you bought both the call and the put. And this was purchased for about $11, and I think they went to about 20. But yeah, it was just underpriced. But when you have an outsized move, volatility doesn't come off like boom right away. That's only the case when you have an inside move.
Right,
so for like Apple, when we did Apple, right? So like Apple was this is Merck. So Apple had like the last one. Oh my God. Anyways, Apple opened up really high, and this was Apple on earnings, really high, but the whole day it like sucked it back in. So on Apple, the options opened up slightly red, but then IV started to really get pulled back in. So for Palantir, until you start having that kind of trajectory, like still, unless Palantir starts coming back in towards under 100.
Yeah, I see your point.
The second that happens under 100, then volatility is going to come back in. So you'd want to do it sometime around then, if you're going to do it.
Okay, can we do AMD and see what's going on there?
Yikes. 108.
So there's a lot of people in the chat right now that are saying they're done with AMD. So here's my question to you to start this off.
The advanced money destroyer.
Is that emotional to sell AMD right here, or is that smart?
Yeah. Depends on when you owned it. So I'll give you some context.
So let's say I bought it today at 115. From a technical perspective, do you think you just cut your loss here?
At 115?
Yeah, let's just say someone bought it today at 115.
Oh, stock.
Yeah, stock. Is it emotional to say I'm out, or is it stupid because this is a 6% dip that'll probably recover soon? What are your thoughts?
Yeah, no, I think you add to it later. That one, because like this is so I mean, if you're in a stock and you're not willing to take a 15% drawdown, then I don't really know why you were in the stock.
That's a good point. That's a good point.
So I think that's my first reaction. If it's an option trade, well, you're screwed because they're going to open up at 0 tomorrow or nearly that. But so with context, right? So like here's AMD context. Yeah, this is like pennies back here. But it's been the $100 mark. So here's $100 right over here if you're going to get it, right? I think from this swing low to this swing high, you're at 113, you're basically right in that pocket where you wanted to see it bounce. So it didn't bounce, right? Because now I turn on after hours price action. These are the same two lines. You're right in here. I think if it's back over 115, so here's the deal. If AMD is back over 115 next week or sometime later this month, then I think it's on the mend. And if it's banging its head up against 112, yeah, I think you can size down or cut it if you wanted to, but it's not like something that you would knee jerk right here because quite frankly, it's not that big of a haircut from the other day. This is like $3 down from where it was like 2 days Monday. But that's at $100 is going to be it's almost like a magnet.
the data center miss, just qualitatively, do you think that's an issue? Is he frozen for you guys too, or am I frozen? I mean, he's frozen, right? Hold on, let me confirm. It's either him or me. It's one or the other. Oh, it's definitely him. It's definitely him. All right, our boy is frozen right here. Oh, there he is. What is going on?
My power legit just went out. So like,
what?
It legit just nothing.
What's going on in Cali, bro? Well,
so I'm gonna have to wait. Well, I just came back on, so I have to reboot.
Oh, no worries, no worries.
If you want to wait for a bit.
Yeah, I'll wait 5 minutes. I'll pull up some coverage.
Okay. All right, I'll be back.
Wow, dude, Cali. AMD was that bad. Google was that bad. Dude, this earnings, bro. Today was not a fun day outside of Snappy Chat, which is giving back some of its gains as well. Google 7.7. Broadcom getting most of the love from the CapEx. NVIDIA's up a little bit. Amazon's down 1.5. I hope to God Amazon's numbers on Thursday aren't that bad either. Snapchat is up 5.6. Snapchat's holding on to 5%. It was up 12%. Chipotle's down 5%. And then AMD down 9% here. Definitely not the best day for big tech earnings or just tech earnings in general. Now, one thing that's important is that, again, I don't think these companies necessarily had horrible quarters, but analyst expectations weren't necessarily met. And as a result, that's why we're seeing. But for Google and AMD in particular, you can't miss on cloud if you're Google, and you can't miss on data centers if you're AMD. I would say that's not the best strategy for your stocks to go higher here. Okay, while we wait for Jason, let's listen to David Sachs. He did have some crypto news today. Let's get an update on that, and then we'll get back into Technical Tuesday.
For finance, and they are very committed to moving legislation through the House and the Senate this year in order to provide that clear regulatory framework that the digital assets ecosystem needs to sustain innovation in the United States. And so those chairmen, I think, are very committed.
Also, does anyone know why Bitcoin's down? I still don't have the headline. Bitcoin right here is at 97, little recovery from 96, but I'm still confused why it went from 102 to 97 today.
President Trump is committed, and I think we can do something here. But as you know, moving legislation through Congress takes time. But I think this is something we could do in the next 6 months.
The feasibility of a Bitcoin reserve, you said that's being studied. It's one of the first things that's on the table here. What goes into that process? Is that something that would be standalone, or is that something that could potentially be tucked into, say, a sovereign wealth fund, which has been the speculation today on the heels of that executive order?
I guess it's possible that the sovereign wealth fund could decide that they want to make Bitcoin or digital assets part of its portfolio. You're going to have to ask the incoming Commerce Secretary Howard Lutnick about that. The item that President Trump asked our working group on digital assets to study is whether it's feasible to create either a Bitcoin reserve or some sort of digital asset stockpile. And so we're going to be looking at that question. We haven't committed yet to doing it, but it's one of the first things we're going to be looking at.
Hey, David, good to see you.
So not really confirming the SBR or denying it. So I don't think that's bearish Bitcoin, but I don't know. Maybe people are expecting a lot more from this press conference today. Jason, you're back.
I'm back. That was weird.
California losing energy.
Brownouts, brother. Brownouts.
That's wild, bro.
It is. It is. I think I'm here.
Yeah.
Okay. So this is kind of where we are, right? So like if you're looking at AMD and you're like, okay, we did have a higher high. Yes, this is lower high, right? So this is going to be bearish near term. Lower high. Lower high. Lower low. So basically the picture I'm painting is that it could be it could be good, but it's not later. So it's not yet. And it could take a really long time, because if this is the last higher low and you're going to try to be bullish on AMD, it could be anywhere down here before it starts to bounce, which means, you know, in this kind of box. So now if I turn on some extended hours here, you're in the box, right? So now you're kind of in that area where, all right, you're going to start potentially looking, but the whole trajectory of that is like, dude, it's gonna take a minute. So you're right in here. And this is coming from this quarter. Basically, we're pricing it back to 2023 of October. I'm pretty sure that's I think that's the bear market lows, is it not?
That is yes, and also that means the market gave AMD 0 credit for the past year of work.
Correct. Is that justified?
I don't know their numbers well enough, but I guess the market's saying it is.
I think that's the question you have to ask yourself. And in this instance, if you believe it's not justified, you have to figure that it took a long time. Like it got out of here. It took 4 months or whatever to get up there, and it's taken a full year to pull it back. So you're gonna have to give it like over a year to claw itself back out. So it wouldn't be any kind of short-term logic that I would be using on AMD.
So if anyone buys AMD right now, they're literally bottom fishing, is your point. Right? I mean,
it hasn't been, I've been on here for like how long? And I've never been like, all right, I love AMD. I think I've had like 5 trades on it, 4 of which were short. And the one long was like, then I just like quickly exit stage left.
Yeah.
Which I think was here anyways. But so to me, it's just kind of like in a no touch, right? Because like to me, I'm like, okay, what's the bottom? It's like $100. You're like $10 away from that. There's not really a lot of juice left to squeeze here to me. And it's too early to get in long because I need to see some kind of reversal signal, which, if you follow me on X, then I'll let you know. I'll post something. I have a ton of really boring chart posts all the time. That'll be like, here's a reversal pattern. Right. So
all right.
That's all I can really give you, man.
Can we do NVIDIA then and see if it's time for this thing to go back to 140 anytime soon?
So today was interesting. We were just looking at this. I don't know if you've ever done, you're not a big trader per se, but like, do you know the term pairs trade?
I've heard of it, but I can't really explain it.
So there's like, let's say AMD is reporting, and a pairs trade could be
like short AMD, long NVIDIA type of trade.
Right. And so the logic most of the time is like, or Broadcom, or I don't know, even not necessarily Intel. Because if you do a pairs trade, you want to think about it like this. If AMD dumps, is it good or bad for the pair, right? For NVIDIA.
Right.
If AMD rips to the upside, is it good or bad for NVIDIA? And if the answer to both is yes, then I think you have a good pairs trade. So if AMD dumps, is that good or bad for NVIDIA? It's probably good, right? Because they're not gaining any market share. Does that make sense? It's not bad. If AMD rips on earnings, is it good or bad for NVIDIA? It's probably good, right? Because the market's doing well. So this was like one, if you're going to set it up, this would have been a pairs trade literally at the close. Broadcom right now is getting a lot more of that. But I think tomorrow, if NVIDIA doesn't make a new low, which by the way, today is the first day that I see right now is that here is a low on NVIDIA. If we're just taking 2 days into account like this, and I took the extended hours off and I just said regular trading hours. It's not, I can't see it well. So this is yesterday's, I'll just use this, yesterday's high right here on NVIDIA. We spent the majority of the day above yesterday's high on NVIDIA. So and here's yesterday's low down here. I'll take this off. So I would use this as your intermediate if you're going to have a stop. But the fact that you're today making a higher high above yesterday's high, very short term, very, very myopic. and holding above yesterday's lows, that tomorrow, if this starts to go up, I actually think that might have some actual legs in this tomorrow.
Have you been buying NVIDIA in this range?
So I did not buy NVIDIA. I didn't do it. I bought a little bit, but like a token amount.
But like, is 117 not like insane to you to get into it, or are you still waiting for pain, or how do you? Why are you? Or do you just have enough NVIDIA so you don't care?
No, I think it's like so. How do I explain this? I think the DeepSeek situation, right? The way it was explained to me, and I might be wrong, right? But the way it was explained to me, and I was able to digest it pretty well, is that like, okay, none of that would have been able to exist without NVIDIA. I think everybody knows that, right? Because the model is essentially like there's a master and an apprentice model. Does that make sense? So like DeepSeek being like the apprentice, it needed that first initial master architecture to exist so that it could learn off of it. But without the original master in existence, it never would have been able to be made. So, but that said, like there's gonna be a million of these moving forward. The only issue, so when I look at that holistically, I'm like, okay, that's boxes. Let's call it boxes. There's still gonna be a lot more boxes being built. That I don't think changed. The power piece, I actually don't think, even when you look at the DeepSeek build, I don't think that it was like this massive, it's still a lot of power, right? Still requires a lot of power.
Oh yeah.
And it was a boatload of memory, a boatload, and it's all connected to networking. I think that the networking piece, when I looked at it, I'm like, okay, there is zero. So I think we could call bullshit on this whole DeepSeek situation in terms of like the net spend, but in what areas? I was like, it might not be a whole bunch of BS on the NVIDIA side, because I think it will be maybe a little bit less intensive from a GPU perspective, but from a networking perspective, from all the componentry inside the boxes, I don't think that thesis changed, which is why I went immediately to Arista and that area. And that makes sense.
No,
and I still actually like, I would like the SMCI. I still like Dell. They're not getting the love though. But I think maybe there's still some digestion that needs to come on. Look, we're early, right? There's going to be so many iterations, so many evolutions of whatever AI. And yes, we're only talking about LLM stuff, which look, I think we're all agreeing anyways, that's like commodity play. So
on good numbers, do you think does the chart take this back to 140 if they can crush the earnings, or?
Oh, easily. I would say more than that, actually. It just has to be one little blip on the radar. Look, what's true is that we haven't, look, what did Google's CapEx, like 75 billion, right?
Yeah.
That's not slowing down. Microsoft didn't stutter, right? Meta didn't stutter. We're about to hear Amazon. I don't think we're going to hear them have a blip in the radar. All of these guys knew about DeepSeek before the market knew about DeepSeek anyways. And nobody still, even at that point, changed what their CapExes were going to be.
Yeah.
So I don't think that changes this. I don't think the storyline should actually change, is my point. Whether or not you believe that NVIDIA here, I think that this is a good spot if you're going to make your stand across the board on a lot of them. Like for me, I'm just more like, I feel like the networking pullback for Arista was a little bit more egregious, like 30-something%.
Yeah.
And I was like, I want to take advantage of this. And Astera, we've been watching Astera for like, I don't know, 9 months. And I just sat on the sidelines and finally was like, all right, I'm taking this opportunity. And I'm happy with that. So when I look at where we are, I think as we get closer to climbing back, Arista, initially, I think we're about halfway back on these. NVIDIA, it wasn't as I guess it was here, right? 142. Is that when DeepSeek dive happened.
Yeah, Max Payne I think was 19%, and Arista was like more like 25%. If I'm not wrong.
Oh no, it was like 30, dude.
30. Yeah, there you go.
Arista and Astera. I was like, no. And Vista Energy. I was like, I was all like, oh hell no, right? So I just looked at them just simply as like, okay, these are the bigger discounts. I didn't think that NVIDIA is a bad discount. Even look at Broadcom, right? So like this one's probably recovered the best so far, right? So this DeepSeek dive, it was about 20%, and you've nearly recovered the whole thing.
Almost there. Yeah.
Yeah. So I think that they will start to go. Now, so where I was going with this is that today is the first time you have a new daily, like, well, okay. So this was yesterday. You broke Friday. We've had these. This is the other thing. We've had these crazy weekend, these weekend headlines, man.
DeepSeek tariffs. I wonder what's happening on Sunday this time.
So this is where this is the chop. I think you base out here, right? Because if this should have been the stop, you broke it just a little bit, but immediately recovered back over this 117.
I just feel like AMD kind of didn't surprise on earnings, didn't like really have that blowout quarter. NVIDIA always has a blowout quarter. If NVIDIA doesn't have a blowout quarter, I think the whole market's kind of going to be in a weird situation.
I think that's the only hesitation, right?
Yeah.
I think this is up tomorrow because like Amazon's going to report on Thursday. And so we could start looking for that. We just heard Google. And then it might be in the clear, right? Because maybe that's the only thing holding it down. But I would still say that this is. So we're now under the 200. This red line is the 200-day simple moving average. So this is your second day over or below it. If it can't get back over the 200-day by the end of this week or early next week, I think that's when you should really think about it, right? Like that's when traders will really be like, okay, what is really going on?
And 200 days is 120, right?
It's 123 now.
Oh, 123. Okay.
Yeah. So it's the 3 trillion mark. So I think it gets there at least. But like I was saying last week, you really want to see this over 132s, right? Over 132s, I'm in there with you and I'm trading high frequency, right? Because we're going back. But until then, I think it's still basing out here.
Could we do
it's
Tesla?
Constructive though. It really is. And then there's one other before we go on. Outflows, inflows, that kind of stuff today. I mean, we had a lot of outflows earlier, like I think it was Friday we started going, but they have been weakening. Monday we had very little outflows, and then today turns into inflows. So money was coming into the market today as opposed to Friday and Monday. So we do see that change right now in character.
I've been buying from the lowest I got was 113. I think the highest I paid was 1.
Really?
Yeah, I
dude, what a sniper.
I got 113.75. I only have to buy another 50 shares to fill up my 500 share position. I should have just bought all 50 at that moment, but I got 10 of them there. And then I've been buying at 117 to 118. I bought at 120 last week. I never thought I would have this much NVIDIA. I have 480 shares. I got 20 shares left to build the position.
Dude, I thought Tesla was supposed to be the next trade. What's going on?
I mean, I thought so too.
What's happening?
I think NVIDIA got a lot cheaper really quick. And
so all of a sudden,
well, objectively, NVIDIA is cheaper than Tesla, but Tesla's a long-term hold, right? But NVIDIA, like, I don't mind.
Oh, Tesla's a long-term hold. Okay.
I don't mind selling NVIDIA if we gap up to 180 by the end of the year. I'm not that emotional about it. But NVIDIA at 120 kind of does feel like if it's because of a Chinese model, that this is stupid, right?
Yeah. No, I agree. For the landscape, right? I think that my only thing is I think that clearly the market's got a little bit more hesitation on the NVIDIA piece specifically.
Yes.
Is it that specific workload? We don't know. Or that specific chipset? We don't know. And it's definitely not AMD right now. That's
my thing. if AMD sucked on earnings and the market's hesitation is on DeepSeek, and we've heard time and time again for the past 2 weeks that DeepSeek is a nothing burger from some of the most reputable names in the industry, including Nadella, then this has to be a stupid dip.
Yeah, I think it's for that whole line, right? So like SMCI is probably, Steve is probably like slamming the table right now. Buy. Probably.
Yeah.
And I don't really think that he's wrong on this, or Dell, or whatever.
TSM, Broadcom, all these guys, right?
I mean, actually, let's look at TSM. So, because TSM's probably about, I mean, this really is not, this really never even got, I mean, okay.
Well, let's do Tesla first, because I know a lot of people, and then we'll get back to TSM. We'll do the other semis.
I opened Tesla today, or yesterday, sorry.
What'd you open at? Like a
If
long
I
haul?
say it, if I say it, and then I just get absolutely shellacked.
Let me guess. You bought a 450 call 3 months out.
5 April.
I was close.
Really?
I was very close. There you go.
How did you even guess that?
I just guessed. I've sat with you for like 100 hours over the past couple of months. I had a
now you know my style. I'm going for the upside here, man. I got my higher low below the 50. I just barely closing. We had actually decent close today. Earnings is behind us. I like this setup here. It's not too dissimilar from the NVIDIA setup, right? Quite frankly, it's like, but NVIDIA, you know, you slightly breach the lows just for like a hot second. And then I looked across this and I'm like, okay, here, this is getting interesting. Sorry for all the lines, I guess. Let me just take some of this crap. Anyways, so it was, I'm looking here. They're buying here. They're buying here. And I'm like, whoop, today didn't get there. It got there right before. I'm like, I think they just won. I think they might have won the battle. I'm going to find out real soon.
Who won? What do you mean?
The Bulls. I think the Bears gave it up because the Bears couldn't push it lower. So therefore, even if they're going to still have a fight here, it's got to go higher before they can push it lower, because they lost this battle today.
Dude, someone just said breaking news. AMD is changing their ticker symbol name to AIDS.
Did you hide that? Because I didn't see that.
No, I just pulled up Twitter on my phone. Just like, and they said Reuters reports, and I was like, I thought it was something serious. And then it was like,
who was that? It was the stock talk.
AMD is below. No, it wasn't stock talk. AMD is below 108. AMD is 10. Yeah, it's below 108.
It's this, right? So this, I took the shot just because I'm like, it's not breaking. It's not breaking. So this is, it's a very light shot, as in like this either works or it doesn't. And we'll find out sooner than later, right? I actually opened it at the close yesterday. It gapped down today. So I was slightly red, like $50 red for like a couple hours. And it closed green, but so it's basically exactly where I bought it. So it was an April monthly 500 call for 1,000.
What is, so the earnings sucked for Tesla.
Dude, why do you,
so that's my question. Why do you think even with that earnings they can get to 500?
No, because I don't think it was about that earnings, right? Because honestly, it was 350 if we got it. I still like your 375 short call or short put, sorry. And I just think the setup is like, okay, you're consolidating, you're about to try to make the press, but you couldn't. This is from here, from that last earnings press. I had it, and I was looking in this area. I really wanted this area, but it hasn't been able to get back below that 370 or really 380. And so today I was like, sometimes you just like, you have your price that you really want. Let's call it 350, but sometimes you just don't get there. And it's like a couple dollars above it. And this, I was just looking at like, this is probably one of those situations where it's like, it's really close, But am I being super greedy waiting? Probably. So I'll just go ahead and take my shot.
Okay, so Tesla is back to the bullish trajectory for you, essentially.
Yeah, as long as it's over 375. That would be a quick stop out, right? So like I'll take my shot with fairly limited risk reward. And so like from a trading perspective, the shot looks like this. So the shot would be, so if this is a long position, it actually looks like this, which ends up being like a 1 to 5 kind of risk reward initially. Initially like that. Could it go up here? Yeah, sure. But I got to get one step at a time. So initially I want to see it make this trajectory. I want to see it get back over that 420. Then I want to see it get back over that 450 and hold. And we're going to battle. Ideally, I would see this battle. I want to see this kind of trajectory. You could do this.
AMD now is at 106. Oh my.
Yeah, so this is the kind of trajectory that I would like to see out of Tesla. If I don't get this trajectory, then I'll probably think about cutting my losses. But the way I have it set up now is that if I did start to get this initial move, I can actually convert this into a time spread and sell some maybe shorter dated 500s if it does make a big move in the next 2 weeks. Then I can do that, or I could just cut my losses with the pretty minimal scar tissue.
Okay, can we do SOFI, which is giving a lot of people
15s? You got 15 for a second. So if it doesn't make a new low tomorrow, I think it's okay.
Are you annoyed at this price action at all?
No.
Why?
I mean, dude, how long have you had SOFI?
I mean, for a long time, but
right. So if you're annoyed with this price action and you're SOFI shareholder,
but you people are more annoyed because they finally thought SOFI was done with this shit.
Bro, it made a huge move, man.
That's no, you're right. It did. You're right.
Like this is great, right? Like this is a massive move. I have people that I trade with, and I'm like, have you like? I give them a hard time. I was like, remember when I said SOFI, and I was yelling, and it was like $8, and they're like, blah blah blah. Everyone's like, no, I'm done with SOFI. I'm never gonna own it. I put that on my do not trade list. Blah blah blah.
Sentiment was really bad at $7. It was horrible. It was not good.
And I'm like, okay. And now I'm like, there you are.
I bought 100 calls when it was at 7, just to make sure if it was like an insurance against it running and me not being part of it. But it was more so like I'm wasting my money here. I hope one day it comes up.
Yeah, I mean, so I think that this is not horrible, right? So like if this is kind of like that trajectory, it can come in. I would like to see it hold 15, but in reality, it can come back as low as 14 or whatever, and then I'll probably look to load something like load more into the leaps. So, we knew, okay, it was going to have this run up into earnings. We didn't know it was having that run up into earnings. We knew that the potential of a beat and skeet was real. We didn't change that characteristic.
But they also did report on one of the worst days ever with the DeepSeek stuff. That didn't help.
Sure. But it's still getting the skeet at the moment. So essentially, so when I say 15, this is that day's kind of low right here, about 14.99.
Yep.
So if this can hold, which is, I believe, like about, it's roughly, now, so this consolidation high is going to be 16. So if it's over 16, it's on the up and up, definitively. And you should expect some volatility expansion. But from here, you want to see it kind of base somewhere around 15. Honestly, you can easily see 14, but you don't want to see below 13s. Like 1350, you don't want to see that. Not really. 1350, you're going to 10s.
I think if management is actually sandbagging, because everyone hated the guidance, if they're like legit just under promising and they're going to over deliver, this thing's 25 by the end of the year. But I think people are skeptical on how much they're actually sandbagging by.
Well, that's cool because I have the 25s, but I have 2 years. But anyways, which, you know, like, so that's how I'm trading it right now. Like I have some equity, but like, I have an active trading account that I look at. There's some equity there. I have other stuff like I don't even like to log into. That's just, I don't even look at it like necessarily week to week. So that's just going to be there. And then I'll actively trade in these leaps, like 2027, 25 calls at $3. They're about $3. They were like 330 or whatever today, I think. And then, but before earnings, they were 5. So I trimmed them and now I'm buying them back.
All right. I think that's fair. I think that is fair. Can we do a hoodie? We'll do grab after this, guys. We'll do grab after.
I'm hedged on hoodie.
What's your hedge?
February 45s. It's just too big to not be hedged.
I think that's smart.
I'm not going home without some. Don't be a fool. Wrap yourself. I'm not going home without some protection, man. I know it's early. I know the price action is really good. I absolutely love it. But you never know what happens, right?
Yeah, it's earnings. You never know.
You never freaking know. I haven't even started to trade this SPX. I finally got SPX on my Robinhood thing, so maybe I could start actually playing.
Yeah, I got it the other day too. Yeah.
Did you?
Yeah, it's fun.
Do you want to? Should we do a live stream? Jason and Amit playing with Robinhood SPX 0-day expiration live at the Power Hour, dude, on Robinhood.
It's a good idea. We should do that one day.
How many views do you think we get? Oh my god,
dude! People want to see us degen into this shit.
They would probably get a lot.
Okay, so your thesis of $50 support, which I'm gonna give you credit for, it was no one else was talking about it but you. It feels like it's kind of happening. Yeah, no one.
It's happening. It's actually. I mean, it's starting to happen, but I mean, it won't get solidified until after earnings, right? So it's if they have a good earnings, then we're looking at 65 plus. Someone asked me on my weekly stream yesterday, you know, should I sell some covered calls, $55 covered calls on Hood? And I was like, absolutely not. No way. I think this is absolutely not. This is just me. I'm not even thinking about selling upside calls here. I mean, the stock is clearly bullish. What I am thinking about, because it is a decent position, is I will hedge this, right? And I will happily pay for some protective puts as insurance that are at a fraction of the price. So $45, here's where $45 comes from. And I'll just go over this really quickly. So this red line here is 47. This is 85. Okay. But 47 here, I think that needs, I would love to see that hold, right? If post earnings, it's going to get ugly, fine. But I want to zoom in over here to where this really started to break down. And it's about 42 plus 43. So I think $45 strikes is going to take you back to 43 if we do pull back. And honestly, if it's some crazy shenanigans, okay, maybe 37s. But at that point in time, I'm probably just going to sell my puts for a profit and buy some more stock. So that would be the plan. So what I don't want to do is I don't want to limit my upside. If they do have a really good report, we see 65s or whatever, I just would not be happy. I would be, and this is in such a small ratio. So let's say downside's 43, right? The $45 puts are less than $1 for February. I'll be able to take those down at a triple or quadruple, right? Assuming it actually gets shellacked. If it does, we'll probably see close to 37s, if that, which it was just there the other day. And that would be my profit that I would start DCAing. And I'd probably use that to buy more stock, man.
I think that's because if it goes to 60, all right, you lose some on the protection, which you already took into account. If it
No,
goes
I
to
lose
40,
the whole protection, but how much? So what I'm saying is that protection is less than $1.
Right.
Right. It's less than $1. So it's cheap. It's cheap. I can only put that on when it's over 50. So only putting that protection on like when it's in the 50, we see 53. All right. That's okay. Right. You got to do it on really strong days.
Right. Yeah, because then that's when the put premiums are the cheapest to buy.
Mhm.
Yeah.
Yeah. So
Okay.
earnings is February 12th. So it gives me the 21st.
Okay. Can we do grab?
Grab. And honestly, guys, I think maybe like $40 if at worst, right? And maybe we'll tell you exactly what it is.
If hood's at 40, I'm buying a lot of hood, but yeah, it could get there. It's just,
But I would happily lose my $100 protection, or if hood's at 40 and I bought a $45 put for $1, that means that my puts would be $5. I would take that profit.
buy
You
the
see what I'm
stock.
saying?
Yeah.
So Grab had a huge move. I think.
Do you know why this happened? I can tell you. If you don't know.
Because the charts told us to go long. And
Yeah,
we said,
exactly.
I told you I bought it. We did this thing the other day.
That's true. It's because the
Tell
chart.
you what, this is what's so cool about technical analysis. Like, I don't care. Like, I don't need to know because Amit's going to tell me. But the chart said to do it anyways. So you tell me what happened.
So they're in talks of buying out their largest competitor.
Oh.
And the volume was more than almost triple their average.
Today.
Yep. Let me see where they ended. Grab.
Is this a good time to buy?
So hold on. Volume was 77 million, average is 18 million. So more than
I don't
double.
think he can answer that question, by the way, guys.
Well, is this a good time to buy Grab?
Yeah.
Well, look, my price target is 10 by 2027. If you have that horizon, then 5 is less than 10. But if the acquisition doesn't happen, because right now it's a rumor, but it's a very credible rumor. But if it doesn't happen, I think we give back all of this 13%.
I mean, you buy the rumor, you sell the news, right?
Yeah, exactly. Now, granted, if they actually do land this deal, dude, the whole stocks narrative changes because that's their biggest competitor, and they just added $1 billion of revenue if they do this.
At what cost?
About $7 billion, but they have $6 billion in cash, and they can do stock deal. Like, I think shareholders would easily look over it because they would legit become a monopoly in Southeast Asia, and they're on their way to become a $100 billion company at that point.
Yeah. So technically, the trajectory here, anyways, was for this exact scenario to happen, and to get you somewhere around 5.25. At which point, I was assuming that it would actually come back down and settle in and lock in a higher low, probably somewhere around 5, and then eventually crack through this trajectory. Right. So right now, what we're doing, God, I don't have the right tool for this, is that we're filling this area in. Does that make sense? So like from here to here, we broke, pull back, retest, and you're right to it. So there's a couple bucks more. You could probably breach it just slightly. It looks like 540. But after that, let's say that goes up here and you still want to see it kind of pull back and eventually breach and then continue on that trajectory. But they do have earnings coming sooner than later. Very soon, right?
Yeah, February 19th.
So they'll talk about it then and probably what that deal structure looks like, if that is in fact legit, which it probably is. Yeah, this purple line here is a 200-week simple moving average. It's tried twice to get over it. It's I wouldn't say firmly over the 50, which is the blue line here. I believe that's the blue line. Yeah. Over the 50, all my SMAs are set to daily, except for this purple that's set to weekly. So it's set on a 1-week time frame. So you just want to see it like comfortably hold 45s, if not higher, at this point. So it could pull back, and it's not a big market cap. I mean, it's not small. It's not super small. It's 20 billion. Why don't they do like a reverse split? Make this more
no, but I mean,
bite-sized.
I don't hate the idea, but yeah, Well, they are buying back some of their stock too, so I think they are ready to decrease the share float, but it's up there, 4 billion shares. That's the other thing, dude. This is the thing about the stock market, right? There's liquidity everywhere because this is a 4 billion share float company that barely gets 20 million shares of volume. One rumor, one headline brings in hundreds of millions of dollars that begin trading the name. I mean, that's how crazy it is.
Yeah. So that said, I mean, knowing, I guess, that it's that low, I didn't know if it was that low float or not. If it really is that low float, what's the short interest?
Let me check, but I think it's less than 5%. Let me check. Grab short interest is
like if you have 20% short interest on a low float stock that is now in a bullish trend, you're gonna get like 30+% moves.
Or 0.8%.
Okay, so I would still 10% is gonna be run of the mill here. Actually, for this type of like dynamic.
Right. So we need to hold 450 is what you're saying.
So basically it's a good move, but the battle's not over. Right? Like we're still in the trenches. You're still in the trenches wherever 100%. You are.
Absolutely agreed. And earnings is really going to, determine how much more we can continue to move, I think, from this.
But it was a good move. I got a lot of things today. Do you own it? Do you own it? Are you in it? Are you in it? Yes, I own it. I don't own that much. Maybe I should own more, but
Well, yesterday was Palantir day, and so I barely slept. And then I woke up, and I think I slept 2 hours. I woke up in the morning, and I look at my portfolio. I'm like, okay, Palantir's still holding 100, which is amazing.
Yeah.
And then I'm like, Grab is up 9%. I was like, what is going on here? And so it was just a lot.
I mean, I read your post. Did you guys read his post? Did everybody think like, okay, he's saying goodbye to the community? And I'm like, oh god.
I made a post yesterday before Palantir. I was like, no matter what happens to the stock, it's been an amazing journey.
It's been real. I love you all. And I'm like,
you never know. You never know what happens.
I'm like, what is happening right now, dude? And it turns out, you guys, that he was going to retire because it's going to $100. That's what's happening.
That's exactly what happened. Dude, my sister was up $20,000. She literally was about to cry. She's never seen that type of a move in her portfolio.
Oh, you made her open up her portfolio?
No, dude, no. So she has the Robinhood app on her phone. She sees her net worth every day, right? So she
does. She looks.
Yeah, I mean, I do the same, bro. It's like on the front page. It's just like you kind of have to.
I don't know, dude.
But you're older. You've got a little bit more money.
I'm not looking, bro. That stuff will make you cry sometimes.
Wait, with the amount you're trading with, I get it. But the point is, she never saw her net worth go up 20 grand in like 2 minutes ever. So it was emotional, and I'm sure a lot of people in the chat also, felt the same thing. And it held 100 the whole day, bro. We didn't give it back.
It really did. Even with Kramer selling sold, right? His post probably gave it that extra $5. Dude.
Probably.
Just saying.
Okay, can we do we got to finish Google. Let's finish Google.
Oh, it's still drill team 6 now. So it stopped so far at this blue line, which is the 50-day simple moving average. That's constructive. Again, it's not broken. It's not a broken chart by any means. That's what's good. Why can I not? This box is killing me. It's not a broken chart. It's still there. I think these are your key levels. So this get out of here. This first line I'm gonna make kind of light orange. This is 190. So this was really what it was playing off of before in this whole consolidation up here. So below that, that's where, like, if you're really bullish, you want to be interested below 190. So this here, I've taken this piece. This is 182. And this is from whatever quarter this is, April 2024, kind of a breakout type quarter here. So this is where you're pricing it back. I think you get close to this area. 175 is the Willow announcement right there. So to me, where this puts this, I'm going to say this 175 is definitively price of interest. It's also going to line up pretty clean with your 200-day simple moving average. Is the buy zone is here. So I think, I was watching CNBC the other day. Forgive me if anybody, sorry. But I don't remember who it was. It might have been like Carter. And he was like, there are two different types of weaknesses in the market, right? There's like something's at a discount. If something's trading at a discount, if it's a nice blazer, I think he said, that's normally $1,000 and it's on sale, like clearance for $700, like you want to buy that weakness. But like if it's sushi that's on clearance, you probably don't want to buy that weakness, right? So I think that this is more of like, okay, it's probably like something that's probably buyable, but is it that big of a sale? It's okay. It is okay here now. At the 50, but I would give this one a 3-day breather. It's not like you're buying 5-day-old sushi. That's good. So I would be looking more as close to 180 as you possibly can, and not be too picky about it.
Have you ever had grocery store sushi?
Yeah. Well, we have like Zanotto's and like Sprouts and stuff. So we have like, I don't know, our grocery store sushi is not bad.
Yeah,
I had Costco sushi the other day. I will say it wasn't great.
I've never had Costco sushi ever.
Really? I was the first time. I mean, I'm still here, so it's all right.
So 190 is 3-day-old sushi, is what you're saying?
Yeah. Or no. 190 is like, oh my God, it's been so long since I wore like nice clothes. It's like your Hugo Boss like blazer on sale for $700. Does that make sense?
Who spends $700 on a blazer?
Dude, what are you talking? Okay. You've never been in the business world. Like, yeah, man. Anyways.
Okay, so Google's the blazer that's on sale.
Hey, David, there you go. Thank you. It's not abnormal.
$700, bro. Goodness.
Yeah.
Okay, so
AMD might be the clearance sushi.
Gotcha.
I don't, you know what I'm saying? Like it might be. Google, I don't think is. So I think it's buyable on weakness, but is this the first day that I want to go out and buy it? I don't know. The real sale might still be coming.
That's fair. Okay, can we do Rocket Lab?
Look at Jeff. I'm wearing a $5,000 suit right. Dude, see? There you go.
You guys are way richer than me. I mean,
it's not about sometimes, honestly, it's just what it's just like their dress code.
All right, Rocket Lab.
Okay. So also you have someone asking about BlackBerry. What is going on with BlackBerry? The amount of requests I've gotten for BlackBerry this week is absolutely insane.
There is a BlackBerry group of investors that swear this thing is the most undervalued, underappreciated stock in the market.
Why? Because of silence?
Because they don't like blueberries or something. I don't know. Like, but it's something I don't know. I don't get it. I tried looking at it. I don't feel
there is this thing. So Silence is a CrowdStrike competitor. If you don't know, it's a real company. It's real technology. BlackBerry really bought them years ago. I don't know why. I saw that happen and I was like, this is a good company going to die. That's all I thought about it. It was a good company though. BlackBerry is quantum. Is it?
Dude, it's quantum, it's cybersecurity, it's fucking fruits.
Look, man, if BlackBerry's quantum, then Intel's more quantum. That's all I gotta say. All right,
Rocket Lab. I mean, this thing's been holding 28 very nicely.
It really has, dude. I have my they're still sitting there. I said I put a limit buy at 25. It hasn't happened, dude. I haven't gotten it yet. So, and I don't know that I will, but this 26, I know you got this. I believe you got this somewhere in here.
No, I bought 100 shares at 28.91. That's it. That's all I have.
There you go. I mean, I'm watching it too, right? Because this is pretty constructive. I look at it a little bit every day. I don't like stare at it, but look at this. Look at this. So when you see this in a chart, yeah, we would call this like the barcode, right? Like a barcode pattern, if you will. But, more like to the point, what we're seeing, and if Matt's on here, hopefully this helps. What we're seeing is accumulation, meaning that people are buying this under 29 a little bit every chance they get. And if they get like a bigger dip, then they're buying it faster quicker, and it's like boom, straight back up, right? So like they're accumulating this right here. This is like someone's got a line in the sand. I pull up my brokerage. Oh, Rocket Lab's under 29, buy. Right? Oh, it's under 20, buy. It's under 27. Oh, buy more. That's what I'm seeing, right? But I'm not seeing them. What I'm not seeing is I'm not seeing them like, oh, it's over 31, buy. That's not happening.
Yeah.
Right.
Yeah.
So it's accumulation, somewhat bullish. That's all I could say, right? Like it's got a new base, a new little cohort of investors kind of building a base right here. And honestly, I think and when they're outside of this range, they're getting even more bullish, like we saw right there. So I'm not seeing anything bearish here at all. That's what I see. I think just stay the course. Not a time to get like super aggressive either, because it's not like, you know, going straight up. But something's brewing is what I can see. Something is brewing.
It's consolidating. I think it's super healthy. Super healthy.
I mean, look at this. It's like literally right there.
Yeah.
So anybody that sold here, they're now turning into buyers, right? So they buy, but this is the textbook definition of an SR flip, where this was prior resistance, now turning into future support.
Can we do HIMS?
What a stock, man. It did better than Grinder. I mean, not Grinder. Grab.
I think it's the best performing stock in the market, HIMS, right now.
Really?
If I'm guys, correct me if I'm wrong. HIMS up 40% year to date. It's the best performing stock.
I think this pattern's pretty close to full. I'm not selling it. But this is what we're gonna do. Ooh, it's not. It's got more room.
No, HIMS is outperforming Palantir right now, I think. Hold on, let me check. HIMS is up year to date. Yeah, dude, HIMS is up 66%. Palantir is up, I think, 30. Palantir's up 38. Which, so that, I mean, to put into context, HIMS is absolutely insane this year.
I thought you were bearish on HIMS.
No, I was never bearish. I just never cared about the industry or the sector as much. But I'm happy with the people that are making money in this. They're growing 80% year over year, profitable. I mean, they're doing their thing.
It's another low float, right? It's not a big company, so you can get this kind of moves.
Oh, dude, there's also a 30% short float. So the shorts are probably scared right now.
It's another low float, high short interest. So I wouldn't look at this. I would look at this more like it's a good move, but is it sustained? I don't know. $50 though. So this is that consolidation area right here that we broke out of, and we charted this, right? So it's like, you know, we liked it. All systems go, like from a chart perspective, technical, just a long series of higher highs and higher lows, right? That's all I'm really seeing here. That's it. So this is the channel that it's now in. I think the pattern is mostly full at this point, though. Like, so this is the view that I would probably take. Here, in reality, I actually use.
Who's longs him in the chat? But if you've been in this name for a while.
Me.
Dude, you got in last week. You're not fucking long HIMS.
I'm long HIMS.
You got in like 3 days ago. Dude, do you remember Smile Direct Club? Oh my gosh, I remember that. Dude, I think I lost like $800 on that in 2020. That was a lot of money, $800, bro. That was not money I could afford to lose in 2020. That was bad. Smile.
So I think this pattern is mostly full, but you could get a couple more squeezy days that could take you really close to 50, but not much over that. After that, it's got to breathe. So this would be you're entering parabolic stage here. which I don't actually think that the shorts would cover in this instance, because it's I see 50. If it got over 50 for whatever reason, then you have a real nasty squeezer on your hands. But for right now, I think this is just like that pre-earnings move.
Can we do ASTS real quick right after? Because that also has to do with the space sector.
No, we can do Redwire.
Okay, we can do Redwire as well.
It's a beautiful chart. All right, that's all I have to say.
They diluted a couple weeks ago, but they got some contracts and now it's back up.
Did they?
Yeah.
I mean, dude, you guys, do you really like ASTS over Redwire? This is the chart. I just look at that.
Oh, the ASTS like community is like a legit community. They believe in that thing.
All I know,
there is no Redwire community.
Okay, but I'm just telling you, this is a real company, and they're buying more and more and more and more.
No, they're doing well.
More than RKLB right now.
Yeah.
I don't. Should we reach out to these guys?
ASTS?
Yeah. It's
I
setting
know
up.
nothing about them other than their satellite contracts.
It's setting up. It wants to. This is definitely a short float, a low float stock. So I think
a short float right now. ASTS. This company is short 22%. Wow.
Yeah. So this one rolls. 2580. I think you could get another press, but I don't know that that's the one. So if you get another press, I would still wait for a pullback. And then if you get a pullback that holds 22s, then I think you load it. So like when you see these kind of prevailing downtrends, the way that you really want to do that, I'm going to show one example, is grab, right? And so the way this works is like you might get through and break that prevailing downtrend and it looks good, but your real buy is when it pulls back and retests and holds that prevailing downtrend that was then broken. That is your best buy, right? It's not like a lot of people think, oh, it's broken, I just want to go out and run. You know, you don't have to chase it, right? Like you can let it come to you. And because look at how beautiful this is. Okay, it's broken. 1, 2, 3 day. Look at this. It's beautiful retest. And then lo and behold, some headlines hit. But this is textbook. This is actually how you want to play these. So ASTS, if it does, like I was saying, you can let it go, right? But that first break doesn't usually hold. And a lot of times it's a little bit more dangerous because a lot of times that first break is fake, right? Like I was trying to pull up, I took that off, but like that first break is super fake and ends up being like a big short, right? So like if this is here, I mean, imagine if you had taken this, breakout long. I mean, that was in front of earnings, but even this, imagine you had taken that breakout long, but if you had waited for the retest and you saw it failing here, then you would have known, sidestep that one.
Right.
Right. So it's a little bit safer, a little bit easier to wait for like a pullback and see if it holds. So anyways, ASTS though, is one where it is such a low float. It might just be super squeezy, but just know if you get that first move and it goes, it may not hold the whole thing. So just trail out, take some stops, take some profit, and then potentially get back in. Or if you like it long-term, and don't let this get below 18.
Okay.
Because if you're below 18, then you're in 17, bigger trouble. Then you have big fall coming.
Okay, can we do Amazon?
Tough.
Earnings.
This one is coming in hot, and I mean like it's coming in really hot. So I'm starting here where pull this out a little bit. So everybody long? I don't know. I think everybody long. I'm starting this perspective just because we are firmly in the breakout, right? So like if you were to double this, whatever, which is why I had like, okay, that can take a long time. But we just want to go level to level. So that's that longer term perspective. So even if it pulls back, it's not going to be a big deal. I really would have liked closer to 200 earlier. Didn't get it, right? This is that 201 kind of area. So at this point, what held was 215. This is a weekly chart. I'm going to drop down just slightly. And so we've had this kind of chop that resolves itself to the upside. Again, picture perfect. You break, even if you miss it, you always get a second chance with not always, but a lot of times you get a second chance at these. That's a better, I mean, it's a better entry. So that said, just this area here, yeah, we're pretty full, right? So
it's at all-time highs, right?
Yeah, but like we're pretty full in terms of this recent consolidation. We're 50% of that. So the full extension is 250, right? And I think that's the first stop that this should be at. We're damn close to that. I mean really close. I don't see this getting over, and maximum velocity here is 268 near term ish term. Maximum velocity. I believe, let's see what this is. I believe that the earnings are pricing in. Let's not guess. So earnings are pricing a $16 implied move, which would put this about 260. I think that's probably accurate. And downside, that means that your downside is more like right back to where we were, 228, which I would also like. So potentially 225. If you got like a big, yeah, see, this is where I don't think Amazon's going to disappoint on cloud like a Google.
What I'm hearing from people in the space is that AWS is taking a lot more spend from GCP. Meaning there are people that work with startups particularly well, and they're saying that those startups are not going to GCP. If anything, they're going
No. Yes, GCP is not for startups.
Yeah.
Right.
Yeah. But all these AI startups are the ones spending on expensive cloud compute, right? For AI work.
That all goes to AWS. It does not go to Azure. It goes to AWS, all of it. It's just the easiest spin up. It's the most common language, right? Like it's like they're like different operating systems essentially. Anyways,
yeah, if they miss AWS, we're gonna have a nasty market on Thursday. It's not gonna be fun. NVIDIA proved to us they could fall 20% and we could live to see another day. But if we miss AWS and cloud revenues, I think we're gonna have some pain.
Yeah.
Also, if operating margins are above 11%, I think the market gets really excited. I don't know if they pull that off in Q4, but
I don't either. Yeah, I think Amazon's the top 5, right? For me, but like it's not like I got all year on this. Like I'm not no matter what happens, I'm not thinking about selling any Amazon.
Yeah. Okay. That's Amazon. Can we do MicroStrategy?
Oh, I haven't.
Are you long again yet?
No. I'm not anything on this.
Why, dude?
Because it's not going anywhere right now. It's in a no-touch zone. It's right. It's right in the middle. I need a little bit more clarity personally on direction. MSTR likes its Fridays and Coinbase. So like I'll look at it Thursday and see if it's getting over this 360. You know, I think that they didn't buy any Bitcoin recently, did they? I don't think so.
No, they said this Sunday they didn't do it.
Yeah. So they'll probably buy some more. Maybe they buy if they bought. Did they buy? They didn't buy this Sunday?
No, they didn't. They didn't.
Oh, what a miss.
He likes buying it at 105 and not 94 for some reason. It's weird. But
well, you guys know it's on the weekends when you buy your crypto, right?
Yeah,
you buy your crypto on the weekends in the middle of the bloodbath. That's when you do it. That's the only time to do it. Everything else is noise.
Okay, so there's nothing to talk about with MSTR basically.
It's not, yeah, it's just going sideways right now. There's nothing happening in this chart just yet. You got earnings, which is going to be a nothing burger. Nobody cares. He'll probably talk about what the plan is though, in terms of the next iteration of acquisition. So maybe that'll be interesting, but it'll be he's been pretty quiet, I think. So they need a little hype train.
Okay, can we do Elf?
Did you see Estee Lauder?
Estee Lauder? Yeah, I saw it today.
Did you?
Yeah, it was down 10%.
Yeah, it got shellacked. They feel like I thought they pushed out their earnings. So this is not a long.
Why?
Dude, I want to say this is a really bearish looking chart.
Why? Give us a little educational moment. What exactly makes it bearish here?
I mean, just you have your textbook double top.
Okay,
right,
that's fair.
Right. And then after that, you have another lower high that breaks down, and you've essentially tagged this last low, which it looks like you're about to breach into this 200-week simple moving average, which would really be like a death blow, especially since you're up from the lows like 400% almost. And this whole formation here is what we would call like distributionary. But that said, earnings can change it all. So it's these guys report. Like,
Is this a inverse Head and Shoulders?
No, this is a Head and Shoulders.
Oh. Wait, where's the head and where's the shoulder?
So here's the left shoulder here, and here's like your head and right shoulder.
Huh. Okay. Gotcha.
Does this make sense?
Yeah.
Yeah.
It looks like a bunch of triangles.
It is. That is it.
I don't really see the shoulder part, bro. Where's the shoulder? Like,
what do you mean? It's your head is right here.
Where's the shoulder? There's no. That left shoulder looks like
Here's your head. This is your shoulder. And he's got his hands out, right?
Okay. There you go. This is why
an artiste.
Okay, so it's not. Also, they have a China headwind that's affecting them in general.
Yeah, so Estee Lauder had that, right? In the stock. So like the makeup, your lipstick stocks aren't doing so hot, man.
Dude, no one's buying. That's good. We're not going to get into a recession. People aren't buying makeup, right?
Yeah,
it's bullish.
Tariffs, huh? I mean, look, they could have done a lot worse, actually. They're not making a new low yet.
Okay, let's look at another stock that's a little bearish today.
So Elf is too close to call. This could all change like quickly on earnings, but if it doesn't, essentially it's like this, and then you take that and you're like that. The which would be
50s. Dude, management is such I would hate for this stock to be
60s. You know, this is like it was, I think this was one, right? Like Roku. Oh no.
Dude, I haven't looked at Roku in a while. Where is it?
Dude, it's like 80 something.
Oh, so it's pumped this year.
I mean, yeah. But you remember the $400 or $500?
Yeah, that's when Kathy bought a lot of it.
Who?
No one would care about Roku unless Kathy. Dude, she has $800 million of this stock.
Oh yeah, I mean she's a bull.
She's relatively bullish on Roku. Yes.
If you can't live in the U.S. though, I don't know. I don't know a lot of U.S. people that are super bullish Roku because we don't really use it that much. I don't think, but apparently it's a big thing internationally.
In Latin America, uses it like crazy.
Yeah. To us, it's like your TV comes with it built in.
Yeah.
So I don't need it. Anyways, sorry.
Can we do PayPal?
I saw some people asking. So, dude, this has me kind of concerned about Square. Not gonna lie.
Why?
I mean, it's the same kind of laggard of a stock, but PayPal has just gone. What is the opportunity cost of owning PayPal at this point?
I mean, the thing is, the CEO said on the call today they're really not going to grow this year, but they're going to increase their margins and buy back their stock. And that's when it really sold off because everyone was like, okay, so you're telling
said that out loud?
He said out loud, this is going to be a year not for growth, but for expansion of product suites or blah, 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 right? And everyone was like, oh, so you're not going to grow.
I swear this guy came from nonprofit world, and you said no, he didn't.
He came from Intuit. He ran 60,000 small businesses at Intuit. Like he was a big guy at Intuit.
Before that,
I don't know. I don't know.
Did he come from a nonprofit? I swear to God, he came from a nonprofit.
Well, he's not making anyone some profits here, so
right. There you go.
You gave me the alley. I had to oop it. You know, I had to oop that one.
Yeah, I don't think you sell this.
I don't think you sell it, but I'm curious if this is a moment where you step in and say, "This is a stupid 11% dip." You know. Dude, they're buying back $15 billion of their stock.
Dude, if you thought that was a bull case, why don't you own a bunch of Apple?
That's a good counter. It's a good counter. It's a good point.
So I don't think that's good enough.
I agree. I mean, I'd rather buy Hood at 53 than PayPal at 79. Any day of the week. Any day of the week.
Are you debating this weekend?
Am I debating?
Yeah. Are you debating?
No, that's next weekend.
Next weekend.
At Berkeley.
Are you doing it?
Well, I'm coaching my kids. I'm not actually debating.
I thought we were going to get a live stream debate. I haven't seen that. Is that posted somewhere?
I have one. I'll send it to you. It's people have the link.
Let's go.
We lost to Denmark in that debate 3-2.
Oh, Denmark.
I hate Denmark to this day, bro.
So I think that 3-day rule. And if you start to see this base, I think below, so you're gonna come in.
Bro, hold on. I just gotta say something. I got a text from my mom. She says, please grab some of the groceries from my car. And as soon as she said that, I was like, what does my mom have to say about grab? That's how obsessed we get as investors. I was like, what does mom have to say about grab? She said, please grab some of the groceries from the car. I'm like, grab? What does mom have to say about grab? Like, that's
what happens. So I think you want to see PayPal chillax right here, right? And you want to see it really start to wake up, or at least find a base. They're going to be buying back stock, right? That's what Amit said. So here's what's going to happen. When they buy back stock, you're going to see it in the price action. And so wherever that is, that's probably going to be the floor. And I think that the last time we saw them doing that was around the $72 level. So PayPal itself should at least hold a floor on its own stock. And my guess is it's somewhere on 72. Doesn't mean that it's going to go up though. Probably just means it's going to it's more like a sell puts kind of situation.
So Davis says Apple's not buying back 20% of their company. PayPal is. How would you respond to that?
Apple's not buying back 20% of their. I have no idea actually how much Apple's buying back. It's still not enough, man. It's still not enough. Like I can see like net flows in the market and stuff like that and be like, okay, Apple's going to benefit for sure. And PayPal's not. I mean, there's actual, and Amit will laugh at me. You guys might too. I think there's growth to Apple. In general, at least from a margin perspective, if the CEO of PayPal said that we're going to go into an investment phase, that's what he said. And you probably want to take him at his word, which means like when a company goes into an investment phase, that's like years of sideways action. Like this is an investment phase.
It's not fun.
Yeah. And so you have to sit there and you think about it like this. Okay. So the company's not trying to make money right now. They're going to spend money to fix some issues. My choice as an investor is, do I want to go on this ride with you now, knowing that you're going to try and mitigate some near-term losses with some buybacks, and hopefully it all works out at the end? Or do you want to come back later after all the mayhem is done? I don't know, right? But that's when a company says they're going to go into an investment phase, this is what you should expect. Snowflake this is investment phase. All of this.
Yeah, you're right. You're right.
So you as the investor have to decide, do I want to take that ride with you?
Yeah, I don't know if PayPal's the company people want to take that ride on, so that is fair. PayPal's defense, they're growing faster than Apple. That's actually true. Which is wild, bro. Which is wild.
But he just said investment phase, right? Like he probably shouldn't have said that. And maybe he's a new CEO. Was he a CEO before or just a business unit leader?
He was a business leader. He was a VP of the small business of QuickBooks inside of Intuit.
Okay. So, I mean, maybe he's on his own learning curve.
Okay. Nubank. Can we do that?
That thing had a good day the other day.
Yeah.
Yeah. So the 10s was a good buy. That's a big move, man. Congrats. 33%. So 10s is a good buy, but you have filled the gap here. I think this is a near-term digestion here. So this is your session gap. So whatever happened to make this stock dump here has basically been washed away. Your sins have been forgiven. And now you're on a new path. So now you want to generate some new momentum at this point. You can take a little stutter step. That's fine. But you don't want to go too far back and erase too much. So this line I just did is going to be about 1250, 1240. Stay long. Keep a closer eye on 1240. If it fails that, then maybe think about maybe looking at some protection, but not. I don't know that this is a good win as it is. I don't know that that's what you're looking for. You got earnings coming on the 20th. I think it probably takes a little bit of a sidebar, pulls back. We look at Palantir coming into earnings, run up, little pullback, and then maybe you get that run up again into it, which is kind of what I was looking at Palo Alto, is you have this coming into earnings, run up, a little bit of pullback. I like Palo Alto here now. Again.
Can we do Palo Altos? People were asking about that as well.
I like it.
What is CLS? Why are people saying CLS? What is that? Celestica? Do you know this stock, Jason?
No, dude. This is a really bullish chart, though.
Okay, let's do this. Then we'll do Palo Alto. What does this company do, guys? It's a big company, 15 billion. That's not small.
It's not big,
but it's not like a small cap or anything.
No, it's a good spot.
Hold on. Unlock the potential of the future. We are Why do they have these generic unlock the potential of the future? How is that supposed to tell me what they do? I still don't get what they do. Logistics, technology is driving advancements that are revolutionary our end-to-end product lifecycle solutions, the most complex. Are they software? Are they SaaS? The rapid acceleration of new technologies is driving advancements that are revolutionizing the way we live and work. We partner with our customers to design and engineer solutions to support the most complex products across. What? Why are you saying wrong?
When I read the what we do paragraph and I don't know what you do, I'm like, what's happening right now?
Hold on, click about us. Let's see if we can get something from about us.
Hold on, let me do. So engage provision of supply chain solutions globally to equipment manufacturers.
It's a SaaS company. It's software. How much is it up year to date? CLS stock.
Connected cloud solutions.
Bro, why is this shit up 40% year to date? What's going on?
Segments include aerospace, defense, industrial, smart energy, health tech, cap.
Someone said they use ChatGPT to make the description. Well, it's up 40%, so people are winning if you're in it.
Is Canadian.
All right. Well,
you want the about us.
I mean, I don't really care, but I guess we got it. Software SaaS.
So it's 3 companies.
They're a subsidiary of IBM. Dude, the world is so big. There's so many companies we don't know about. It's just crazy.
We would call this an integrator.
System integrator?
Yeah. That's one. AbleCon.
Providing world-class product lifecycle solutions to customers in highly regulated markets.
This is their government arm of the same.
Yeah, why did you say it was Canadian with disgust, Jason?
I did not say that with disgust.
Yeah, dude, you're like, it's Canadian. That's how I
It's
interpret
Canadian.
it. I didn't want to say anything, but
I said it's Canadian.
No, you're like, it's Canadian. That's like
I have no problem with the Canadians.
I love the Canadians.
I do. I just can't.
I need to go to Toronto and do a meetup. We gotta go there. All right, so I guess we can look at the chart, but
this looks like an IBM type company. It looks like a services company that does like engineering and makes you faster, more efficient. I only said Canadian because like the last company I worked for was bought by like a big Canadian reseller. So it's just
sounds like you don't like the Canadians, but whatever.
I have no problem with them. I love Canadians. Dude, who doesn't love milk in a bag?
They drink milk in a bag in Canada?
Oh my God. You guys.
Wait, no, hold on. Wait, I'm not trolling. What are you talking about? Milk in a bag? What the fuck is milk in a bag?
Who doesn't love milk in a bag?
Wait, Canada drinks milk in the bag?
Dude, you can freeze it. It's smart.
What? This is they don't have like gallons, like regular, just like
no, dude. We're the weird ones, all right.
Milk in a bag. They have this in India, actually. They do this in India. I didn't know.
Yeah, I mean, it's you can freeze it.
All right, bagged milk. That's what Trump wanted. Oh, that's why Trump said we don't need their milk.
Did he say that?
He was like, we don't need your milk, dude. Yes, he said that. So
oh,
now
God.
I get it. Now I get it.
No,
Okay.
this looks like a whatever it is. It looks the chart is like really good. I wonder what my company is doing. Verge. Is it PSC? CTS? TSX? Nope. Just chilling.
I've never seen this one.
Huh?
I've never seen this one.
Nobody knows this one.
Yeah.
This is every seller I worked with.
Okay. Can we do Archer? Can we do Archer?
I never did this one. ACH.
R, yeah.
It shows how much I look. Nope, sideways still. You gotta wait till earnings. Nothing's really gonna happen. You need a headline to move this bad boy. It's gotta move. It's holding the move. Wait.
Oh shit, dude! It's 7:08, dude. Your wifey's gonna be calling soon, so I think we get into rapid fire now, and try to get you out of here in like 10 minutes max. All right, some quick one, guys. Merck, MERCK, was down 10% today.
Okay, Merck had the biggest move today in like forever. I actually lost on this one because I did not see this kind of move coming. I think this was more to like a vaccine thing or something. They're just not. These are tougher ones. I don't know that it could come down a little bit more. I'd say wait 3-day rule, right? This to me, it was a bit overblown. It didn't close on the absolute lows, but it definitely didn't close on the highs. So, but I feel like this was the biggest move it's had in, I think, 4 or 5 years. So you got to give this a bit of breath to let this cool off for sure. But 85 is not, it's like that. That is, I feel like, discounted for sure. I just don't know. It's about pipeline. It's about a lot more. Sometimes Merck ends up being like a really big deal. I think around this price, you're basically back in this area, which, by the way, was a really good breakout last year, or I don't know, 2024, 23, 24. This was a good move, but you've now erased the whole thing, right? So like this move, this 30% move upside is like, boop, you're back in it. So I think you need to see this hold, which could take you in a little bit lower, but you don't want to see a big nasty pullback from here. I don't think that's warranted either, per se. I think this kind of goes sideways for a bit. Maybe it chops up a little bit, but I don't know. I don't think it's going to be enough to like reverse this anytime soon.
Okay. Affirm.
Earnings coming soon. $60, a nice little pop. Could not get back over this hump though. So here's the box that you want to get over right in here. Couldn't really get it. Really nice move. But it's tired. So you got to give this a little bit of breath to breathe. And then maybe this is Thursday. So this report's on Thursday. You have to do some analysis on that. But yeah, earnings are going to erase whatever TA I have to say on this quickly. It could be $100 stock. It could be a $40 stock. But long term, I think Affirm is in a pretty big reversal in general, or a turnaround story. So this is a weekly chart of Affirm. While it might not have a huge move to the upside, I don't know. But as long as it's holding this 45s, and I know that sounds like it's really far away, but if it holds this 45, the trajectory over the next couple of years actually could be pretty decent on something like this, because this is a big kind of reversal setup, but it could pull back to 45 and still be in that same setup.
SMCI.
I mean, this is where you're going to do it if you're going to do it, right? You're all the way back here. I don't hate it. I think it's worth a gamble. And I think you do it now because they finally got, did you see freaking SMCI today? Like started moving all of a sudden off of finally confirming like an earnings date.
Yeah, February 11th.
So they finally confirmed an earnings date and they decided to pop a little bit. So I mean that's cool. The whole time this whole area is right in here. So this $27 area, look, the box to me was 27 to 37. At least in a chop zone. A breakout would bring you to like 45s to me, but I don't see a whole lot more. It would be luck to get more than that on to me. But that's a lot of move from here.
Okay, Celsius.
Dude, what a crap stock, dude. I don't know what to say here. I didn't even look at this today. All I know is it's probably going to be red, and there it is. No. Just say no.
The way you said no, dude, it's like a baby who's like refusing to shower. It's like, no.
No. Just say no. I told you guys I don't want this unless it's over this 30-something level. It's not. In fact, it's like a boatload lower. So 30% lower. I think since I ripped the cord off pulled the Band-Aid off. I've saved myself 20% of heartache. I don't know, man.
I mean, it is what it is, dude. It's energy drinks. No one cares about them right now. I get it.
No, it can be cool. But
not in this AI arms. Dude, Monster was the best performing stock when we didn't have AI. We have AI now.
Okay.
All right. No one cares about
that's fair.
California Breeze energy drinks.
It's fair.
You
say Braze? Do you even know that stock?
I don't know what Braze is. You can do it.
Oh, it's AI software. Marketing. Actually, a lot of people. You've never heard this company before? A lot of people use it.
I think I have.
You don't use it?
Braze, dude, why is
you don't sell anything? It's a marketing software.
Yes, it is. You're right.
People use this like a lot.
Yeah. I've heard of them, but I've never deep dived.
It's interesting. Might be worth it. Super speculative, but anyways. Stop it. BJ.
Palo Alto Networks and then CrowdStrike kind of at the same time. Those two.
Oh, yeah. So I like Pan. So here, Pan is Pan because you actually call them Pan when you're working with them. You don't call them Pan W.
Do you cook something on them?
Yeah. Yeah. So this from this 170 or whatever, the 200-day, like the little kiss right here. I wanted to see it hold. Like this is it's a great move, by the way. Almost got to that 200. Now I think you're looking at a decent little pullback here. So it's earnings not this week, but next week, which means that they could get a little, not next week, but the week after. No, next week, the 21st.
For Palo Alto? Yeah, 21st.
Is it the 21st? 13th. So it's this week that, as in like the next 3 days, that I think you could get a nice little finisher of a pop. As long as it holds this 180 level here, I think you could get that little finishing move in short order, which, for a weekly contract kind of trader is a lot of money, potentially. Actually.
Okay.
It'd be like watching these 185 calls for this week, but not next week, because that's going to include volatility and they're overpriced. So like if you looked at 185s for next week, that's like 750, but for Friday, they're like now they're okay. Now they're almost 300. They were under 200 earlier today.
Yeah.
But I think that move, it's something to watch for sure. That could be close to 190 and at least back up to the 50-day. I don't know why I don't have the 20 on here. Where'd it go? Not here. Yeah, see this white line? So that's the 20-day simple moving average, what it held today. So you want to see that. Basically, today's low hold.
Okay.
It's a decent little setup.
Okay. Can we do a GEV and VST together?
Well, so I don't think they're really that relevant together. I mean, they are, but they aren't. I think VST is like heavy data center. GEV, not so much. Just more like power overall, but it does benefit. This is where you want to see it at least. So these guys had these big moves on the DeepSeek dive, right? Huge, 23%. And then since then, they have recovered, right? Like a good amount. So 22% upside recovery. That's a big move, you guys. And now you're looking to see, does it pull back? It's held this 350 level. So I'm still long. I'm not even thinking about doing anything here, though. I think this needs a little bit of time to breathe. It's a little tired. This thing, I was about to do a really bad analogy, but it's worn out, right? It's been beat up.
What was the analogy?
We're not going to go there.
Now you can't say that, bro. Now we want to know the analogy.
It's been used and abused. It's beat up. You need to give it a second to recover and come back to her later. right? So I think similar VST used and abused, huge. I mean, huge move. You got like, I can't tell you. I bought 160 calls on VST like this day here and was like 500% in 30 hours or less, right? Huge moves. Yes, both. Decent pullback spots right there to 155. I like it, but look, they're worn out. Give them a second to get their together. It's not like Tempest, who has just like made a big old move. It's not like Tempest got like smacked around and had to like, you know, bounce itself off the rings. Right? This is doing good, but VST, GEV, sorry, like let them breathe. Let them breathe. Come back to them and really let them breathe, because you want to let this volatility when it comes to options burn off a little bit. Okay. Sorry.
That makes sense. I just saw a headline. It's a very weird headline, but we can move on.
Arista, I like
Arista Networks, yeah.
I don't think this one needs to breathe that much though, because I feel like this one, I just think that was disrespectful what happened to Arista.
They had earnings already or no?
No, they have them on the 18th.
And they fell 30%.
Yeah. They fell 30%, but this one has not been nearly as whipsawed as the others. I mean, it's been okay, but like again, it hasn't had the same kind of pullback, but it didn't also have the same kind of like slingshot reaction from the lows. So it's a little bit healthier, almost like an NVIDIA, but like NVIDIA is now, she didn't have that big run. So she's taking a longer rest to get off the ground. So maybe it'll hit the ground running faster.
Okay, can we do Riot, Bitcoin miner?
Dude, you're gonna waste just on
I gotta do what the chat wants, bro. They want to see Riot. I mean, there's nothing. I get it. Clean Spark Riot. There's nothing to discuss until Bitcoin either moves super down or super up, right?
What are they fucking writing? Obligatory. All right. Your obligation is fulfilled. It's not going anywhere. Sell calls, sell puts.
That's
at
fair.
The money. Straight up short straddle this bad boy.
CrowdStrike.
Oh, where'd it go? $407, my dude. This is nice. I think do we do meta?
We didn't do meta yet. We gotta do that one.
I think this is, this is happening. It's just like, dude, this is a good, so this little extension could take you to like 430s plus 420s. It's gonna be 420, man, before you know it. It could be 440 plus before earnings. This is a pretty bullish setup as long as it holds that 390 level.
All right. Nike.
That's bullish here. I haven't looked at Nike. What is it doing? It's gone nowhere. It's great. I love it. Stay long.
73, right? It's stuck there.
It's
stuck,
stuck,
dude. Bill Ackman had 16 million shares of this for some reason. For some freaking reason.
Dude, I trust Bill.
I
mean, it's okay. It's not like a great dude. Every time I try not to get super excited about Nike, because like you get excited and then all of a sudden it's like wah wah, right? So okay. Anyways, it's breaking this little downtrend here, and it did retest it, and it's holding. And it's holding both the 20 and the 50-day simple moving average, which means that we should be seeing over 80 sooner than later. Which, if you're I mean, it's okay. I mean, I'm here for more. 90 something. If you go from $70 to $90, that's a good percentage win.
Okay, Broadcom.
Did you not do? I thought you. No, we said we are getting Meta.
Oh yeah, we'll do Meta then Broadcom.
Yeah, we did Broadcom already. So Meta was like, could this be 750 like soon? And I'm like, I wasn't thinking it could, but then yes, if this starts to go.
Dude, it's holding above 700, which is very nice, right?
I know, right? Is that wild? And we're creating this little consolidation here. So if it's from here to here, I mean, this is earnings day. And honestly, did you even notice that it's given its whole earnings move back?
Yeah, I saw that.
You did?
Yep. I mean, it recovered a little bit of it though. The 705.
Took it all back again. So it gave it all back and then it took it back. And it's back. It's back over sevens. So I think that if you get this extension beyond 715, give or take, yeah, you should really see close to 750 in short order after that. And that's just like one more little pop. Whatever that looks like, it might look like bang its head up against this once or twice. And then right in there.
Okay. Taylor, thanks for the $10. FIX. Do you know this one? It's an HVAC company.
No. Comfort system.
Oh, this one got hit bad.
Why?
I don't know. But it got hit. Oh, we got to do Snapchat for sure. We got to do Snapchat.
Dude, what is it? $15 billion HVAC company. That's a huge HVAC company.
Well,
something's broken here. I'm not really sure what it is. I think it would go in your staples category, but I just don't think that defensives, this would be like, what's waste management doing? This would go in the same category as like a waste management to me, but they're kind of stalled out. Although this looks like there's something else going on. I don't know what this run up was or this big move to the downside. This is moving a lot more than I would have expected. But this looks more like 380s.
Okay. Have you looked at NIBIS yet?
What?
NBIS?
I've heard of this.
I've heard of it too, but I haven't looked at it yet. But people are crazy about this stock. Jackie, thank you for the 5 super chat. But yeah, is the chart attractive at all on this one?
No.
It's a semiconductor name, I think.
Would you rather Wolf or is it Nebius?
Nebius, yeah.
Nebius. I'd have to. This might be a better one for Jose.
Okay,
if it's a semi name.
That's fair. That's fair.
Dude, look at this. Wolf speed.
This is a Bitcoin miner, right?
I don't think so.
I thought they were. Maybe I'm the WULF one. That's what I'm thinking of. Okay.
What? No, it's semiconductors.
Oh, you're right. This is semiconductors. Yeah. Can we do Moderna?
Mostly because Barish.
Barish.
Moderna's always Barish. What was your target on this one?
I don't know.
Didn't you have a price target on this?
No.
Yes, you did.
On Moderna?
I swear you said 0. Did you not?
Are you like filled with stock market pickup lines or something? You just like, punchlines and everything. Like,
I bought Moderna at $20 and I sold it. Listen, I sold it higher than it's trading for today. Win. I gotta win.
All right.
And I'm not buying it back. But they have a cash flow issue, and like it's look at Merck. Look at Merck. And Merck's issue was a vaccine thing, right? And Moderna is a vaccine company, but like, you know, Amit is like for sure. RFK is going to come in here. It's going to change the entire landscape of the country, and we're not even going to need vaccines anymore. So, what is Moderna going to do? I don't know.
Okay.
They have a cash flow issue, and their burn rate is too high.
Oh, that's fair.
And they do a product that is not really needed right now. If that changed, whether like they had a new product that is needed, then sure, maybe. I've seen this a bunch of times. I don't know. So Monolithic Power Systems is actually a beast of a chart, long term. This looks good. We should look into this one.
What's the market cap on this one?
35. This is a long-term staple. Yeah, you don't do that. This looks good. I think this is a good spot, long-term entry. I do like this call out, you guys. Yeah, this is textbook breakout, retest, hold. And now getting over some critical levels. I wouldn't mind picking this up. I mean, I wouldn't mind. There's earnings. I wouldn't mind picking some up personally. Equity, partial before the report, and then filling the rest after, just to see what happens. So like 25%, maybe 30%, and then if they have a good one, great. I got in for the ride. If they have a bad one, then I could decide, do I want to, either way, right? You could kind of decide what that, but I would do a piecemeal, a little before, a little after. But the chart looks great. I'm not super in the weeds, but I know this is not like a small company. It's not like a company that's just showing up or anything. It's been around forever.
Okay, NVO, they have earnings tomorrow.
Yeah, I just skipped it because like I think earnings is gonna be a big tell. It really needs to hold this level. I have a feeling that it's probably not gonna go anywhere on earnings, but if it does, it's probably gonna be the 70s, which is weird. Like these guys are just in a really tough spot, and the Merck thing just kind of put like a little bit of a bad taste in my mouth. Lilly's doing much better, but they also have earnings. So it's going to be like NVO, then boom, Lilly. So Novo is going to be a precursor to Lilly. This is a pairs trade, right? So like Lilly's the pairs trade against Novo Nordisk. Whatever happens with Novo is going to be a bit of a precursor for Lilly.
I think that's fair.
Yeah,
They had
Spencer. Moderna was down, 92%.
Yeah, it was bad. But they had a FDA or some type of drug trial last month, right? That messed up Novo badly. Like it took them down 20% or something.
Yeah, but I mean,
they're trying to hold these levels right now, is what you're saying.
Right. And they could have there could be another drug. That's why I was like, at the end of the day, it was HIMSS for the win. Because HIMSS doesn't have that kind of risk because they don't care. They're just going to resell it. And the more ease to like easier it is to access, like easily accessible, then the better, right? Like I don't know. Do you know anybody on these GLP-1s at all? Do you know anybody?
No, outside of you. I thought you said you were doing it, but
I'm not doing it yet. I would be a lot smaller if I was.
Dude, when I come over, we gotta. You can't. When we get dinner, you can't be doing GLPs.
You're gonna laugh because when you come over here, and if you see this place, you'll see the room right behind me has an entire gym set up.
Oh wow!
Like
you just don't use it.
Because the room I'm in right now used to be the gym.
Yo, here's a fun question.
But we can play basketball inside over here.
That's actually fun. Let's say you sucked at trading, like you were just ass. Wouldn't it suck? Because the way you can justify not like exercising or working out is because you're making a lot of money. But what if you were losing a bunch of
It's
money?
not justified, dude. I don't know.
I mean, it's not justified, but I get it. Like, I understand why, you're spending your time focusing on investing more. But it would suck if you were losing on every trade, right?
Yeah, it's because I didn't realize like trading is exhausting, dude.
Yeah.
Like I didn't realize how exhausting it really was, but it really is.
No, and people downplay like, oh, you're just sitting in front of your computer, but the mental stability it takes to make a trade is not easy.
Dude, it is not easy.
Okay, Applied Materials. Can we do that?
Yeah, I was gonna check on AMD, so it looks like she's kind of bottoming. Google also looking like it's kind of bottoming. 190, not horrible. All right. Hey, Matt. This one was the first semi to report, right? I believe it did. No. I thought AMAT went way earlier in the.
I don't think they reported yet. Yeah, they didn't report yet.
No, they haven't. I thought they did already. I thought they're usually early in the cycle. This has gone nowhere. I also don't believe that Applied Materials is in the right historically space, but I do think that you can kind of look at LRCX maybe, because like LRCX wasn't like in it has not held it. So at 75, it's stuck in the mud too. So okay, so Lamb Research is probably going to be at AMAT, which means that you're probably looking at the 190s. So probably like a nice little pop to the 190s, 195s, but not out of the woods. So I think you just trade the edges. And I'm literally taking this off the LRCX trend right now. If this is the box that you sit in, you're closer to the bottom now, but you could go to the top, but I don't think you get out of the weeds.
Okay. Snappy chat.
Snappy snap. I'm scared to look.
No, it's up. It's good. I have a swing trade on this. I'm thinking of holding my shares. Dude.
Is it though? Did you look at it since we stopped looking at it?
I think it's still up 8%. Check.
That's not enough.
But they're profitable, which makes me happy. And I think maybe it's a turn the company.
Are you going to turn your trade into an investment? Are you going to be a bag holder now?
No. I was looking for 14. That's all. I was looking for 14. It's at 12. If we're going back to 10, I break even. I don't think we're going back to 8. Because we were profitable.
Well, I think I lost money on this one because so Snapchat had an average move of 20%. It had a 15% implied move. So I'm like, okay, that was the exact same stats that Palantir had. So we'll see.
The chart is quite a chart over the past 5 years.
I'm going to hit 15 plus in the aftermarket, which does me no favors.
We did.
We'll see. We'll see it tomorrow. All right. Did you make your post? Snapchat, Snappy Snap, first profitable quarter.
Dude, I don't care enough about it to tweet about them. Like,
do it. Do it now.
I'm not an advocate for Snappy Chat.
Snappy Snap, as opposed to the first penny of profit.
Dude, I was one of the first users in 2012. There was a girl in school.
You have to do this whole blog, like how he's taken the sexting application.
Okay, we were in like 8th grade or whatever. But the point is, like, just sending selfies. That was like the first form of flirting.
You were sending snaps in 8th grade.
Selfies we were sending in 8th grade. But like, it was legit. I was a daily active user for years, and then it fell off the face of the earth when I got to college. And now I'm just like, okay, so who uses this? I guess
who does use this? I mean, they all use it.
But there's 450 million people that use it. So it's like,
oh, Reddit, Max Payne 210. That should be it. You should be able to pull it back down.
I rolled my Reddit call to 300, by the way.
You did?
Yeah, I'm holding on for the long term.
Holding
on to Reddit, baby.
You did the big roll?
Yeah,
the one that we talked about to May?
No, I did it for 2027, January.
Oh my God. Why? What are you doing? Why would you have a cover call of 2027?
Well, because I kind of want to go long on it, and now I'm just like,
okay. Right. Well, I mean, just did you pull in some money?
Yeah, I pulled in $1,600. It was good premium, but look, my average is 150.
Did you do the 200s?
The 200s weren't good premium.
I mean,
dude, if it gets to 300 in 2 years, I doubled. I'm not upset about that.
What did you do?
My average is 160.
No, the call.
300. 2027. I mean, look, the reason I did it is because
you just locked up like 30 grand or
no,
20 grand.
I locked up 17 grand, 16 grand. That's first. So I only locked up 16 grand. Number two, if Reddit collapses,
for 2 years.
Yeah, but that's okay because if it collapses, I want to buy more because the covered call premiums on this thing are insane. And I would love to get more shares if it actually collapses. And if it does collapse, I can buy back my call for break even or a profit. And then I'll just write another round of coverage.
How many people said that to you about Palantir selling their calls?
Well, okay, Palantir is different than Reddit. I don't want to lose my Palantir shares. If I lose my Reddit, I really don't care. Like,
but you just married it.
Yeah,
you put a ring on it and
turned
you
a
took
hoe
it
into
home.
a housewife, baby. Like, is you know.
I said May, dude, and I set it up so you were gonna make money. Anyways,
well, now it's at 220. So
no, it's not.
Well, where is it at? 215?
210.
It got to 220. It got to 217. It was up there today.
It was, but it makes a big move like that.
Look,
but
I think
it's exhausted now. I think it's exhausted now. Now I can come
no,
back.
We said that at 185, bro. Like, at what point is it actually exhausted?
No, I said, pull up your text messages. It's 210.
So wait, what tells you 215
was the target?
So what tells you this is the last of it?
It was this, and this, whatever this was, this consolidation.
The 218. See, thank you. It was at 218.
Yeah,
bro. There's a weird feeling I have that this thing goes higher, bro.
It's possible, right? But now it's going to take a couple days back, and you might be able to get your money back. You know?
Well, what if they crush?
I'm just saying it's going to give you an opportunity to rethink. So possible annulment available.
Yeah, that's true. I could get out of it theoretically. I could.
Yeah.
If it crashes back to 170 or whatever.
Yeah.
Okay.
Yeah, the premiums are juicy.
That's why I'm like, dude, if it goes to,
but you just locked up for 2 years.
Yeah, but I fell in love.
So you're not in it for the premiums.
No, I am in it for the premium.
No,
but I'm just saying,
if I got them for 2 years.
Hold on. If I got the bottom, then I'm more than happy to hold it for the next 2 years because
I know, but you're not going to be collecting no juicy premiums for 2 years. You got it one time. And they baited you.
No, but that's okay. If I double on the shares, I don't need the premiums. Like the premiums you have to work for, but if the stock just goes up, I don't have to work for them.
You have to work for them. This is
correct. True. Yeah. All right, dude. This is the longest we've ever done. I think I need to let you go. Or the
really? Yes.
She's probably gonna kill me and you. So
okay.
If you have not followed Jason on X, this is his X right now.
Please. Yes. Oh, I forgot. Okay. So we're going to do one more training for the earning system tomorrow. I'll post it. I think I posted it already.
Is it? I don't think it's on your thing.
Dude, I don't know. I suck at this.
Okay. So just follow Jason. You'll see the training in his thing, in his Twitter.
Okay. But we're going to launch Mastermind again. And last time I gave you guys like the best code. I'm trying to pull it up right now. And I know I asked them to make a new one. So all I would say, okay, is if you go to the trading tomorrow, we're not collecting money. It's just there is a wait list. Put your name in the wait list before tomorrow at midnight. You'll lock in an early bird price, and then when you check out, use code EMIT20. That's we're doing like a fat discount. So you're gonna you basically stack discounts, but it's EMIT20.
If I knew there was a discount code using my name, I would have picked a funnier name than EMIT20.
I didn't. I wish I did.
What did you say? I didn't what?
I didn't come up with it, but
I would have picked a way funnier name.
But yeah, you want me to change it? I'll change it. Let's change it. But anyway, so I was just saying, so this is, I think it was on this post for the earnings. This is the link to register. free webinar.
And this is earnings train, how to train during earnings, right?
Yeah, how to trade. So this is 100%. So this is free webinar, and it's like this long, but it's step by step. Learn about volatility, learn about like how options work and how it's priced in to the contracts, and be able to figure out quickly what's overpriced and what's underpriced, right? I think I was trying to I just posted one too just the other day. But yeah, so this thread, it was like I did one that was like, hey, here's the trade. It was Apple. We talked about it before. Apple never really makes a big move. And so as I went through it, I was like, I posted the trade beforehand. I gotta find it though, damn it. Here was the trade. Jesus criminy. Here was the trade. It was $1.70. It's a neutral trade. We call these a time spread. We can't just do it randomly. There's a lot of data that goes behind it. So it's $1.70. Actually, and then I tracked it. It was 240 midday, 310 towards the close, and just kind of walked it through. But it actually closed about $400 on the day. So it's learning how to trade options through earnings like that, and basically identifying the best structures, how to identify the right ones, how we identified Palantir as being underpriced, and how to trade it. But that's all free.
So to summarize, go to Jason's Twitter. You can follow him there. If you are interested in a free options training webinar, then that's what he's offering. And then if you like the webinar, you can join all of his paid stuff where he goes through a lot more deep dives and mentorship training, all that stuff, which is
yeah, this is the mentorship thing. Which, by the way, this is like it's 5 weeks of trainings, three days a week, Monday, Wednesday, Friday. We specifically leave Tuesday out so we can do technical Tuesdays.
That's so nice.
And these are 2-hour trainings every 3 times a week. So it's 15 sessions over the next month and a half.
Yeah. So for anyone who's really interested in actually like getting a lot deeper into this stuff, and not just the charts we look at on Tuesday, but like having some one-on-one mentorship in this stuff, obviously Jason's, I think, the best in the game.
Appreciate that. I'm trying to find that other here. I'll just retweet this here. So that should be at the top now. That's the link to the webinar there.
Yeah. So I did a free options beginner video last week. Jason's going to do options 201 with me in a couple weeks. His webinar series training mastermind is a lot more deeper than that. And so, you know, if you are interested, then that's what you can.
Yeah. So the mastermind stuff, it's a big deal. It's not for like it's for people that are used to trading. A little like if you're already an investor and you're looking to move into trading, and you've already dabbled in the trading world and you had some success, but you want to take yourself from like beginner intermediate to like master, this is it, right? Yeah. This is where you go. So that's what we're absolutely best at. Not necessarily for super novices, no.
Yeah. Yeah. If you're a novice, just stay tuned for me and Jason doing.
Yeah. I like for the novices. Look, I don't think you guys should be going out and paying a bunch of money for like in-depth hands-on trading. Like this is different. We want to give as much of that out for free as we can. So like this, what you're doing, Amit, et cetera, is like,
it's good for
about it, right? And we'll do options 201, whatever. Learn about a little bit more advanced trade structures and things like that.
We stayed on the show so long that the overnight markets are about to open in 12 minutes. That's pretty wild. All right, Jason.
On the way.
What do you say?
I should probably pick dinner up on the way home.
Are you going to get some Costco sushi, or what do you?
No, I'm not going to Costco, dude. That's way too far.
So what are you going to get? What are you going to get for dinner?
I don't know. You see this? I got a chart now.
Dude, get some Korean food. I think you would enjoy it.
Dude,
I think you would enjoy it.
Korean food. Do you want to do Jen, like Korean barbecue when you get here?
Oh yeah, can we do? Dude, I haven't had Korean barbecue in so long.
I'm all about. We should go to Jen.
All right.
Unless the chat has a better place.
I'm seeing Jason next Monday. So there we go.
We have to have robots deliver our food, so that's kind of like criteria for sure. So I can make some content.
I haven't had Korean barbecue, I think, in like 5-6 months. It's been a while. But, yeah,
It's been longer for me, for sure.
I had it in New York. But no, you eat it every night because you're Korean. What are you talking about?
Clearly.
Yeah.
All right, guys.
Jason.
Adios. I love you all.
Talk later.
See you later, man. Bye.
See you. Wow, it has been a hell of a 48 hours. Palantir, Google today, AMD. That's it for me. I'll be back tomorrow. Dude, the thing is, I didn't sleep last night, so I kind of like, I need to sleep, but I'm also just like, I have a lot of adrenaline and it's keeping me up. But yeah, even I'm still not over yesterday. I mean, we're holding $100. We're holding $100. So pretty incredible stuff. We'll be live tomorrow. Market open. Tomorrow's earnings are going to be still important. We have Qualcomm, ARM, MicroStrategy, Ford, Symbiotic, and Uber, Disney, Novo Nordisk, Toyota. Those are the big ones. And then obviously Thursday, we got Amazon, which is the biggest. So this week doesn't wrap up big tech because we got NVIDIA in a couple weeks, but it definitely gets through a decent amount of the big tech earnings. And then we finish up with NVIDIA, and then we got another month left, and then we get back into earnings into April. So that's it. There we go. Thank you, everybody, for being here. I will definitely try to sleep early. I still have to finish some work, so I probably have like another hour and a half left, but then I'm going to knock out, and we'll be back tomorrow on the market open. All right. Thank you, everybody. Didn't you mention a 24-hour stream once Palantir hits 100? I think I literally did say this like 3 weeks ago or 2 weeks ago, which is wild because now we're here. So, but I think when I move out and we get to the new apartment, that's when we'll do a 24-hour stream. We'll get a bunch of guests. It'll be fun. So we will definitely do that. Hopefully in the summer if we can move out by then. But yeah, incredible stuff, guys. Thank you, everybody. Hope you guys enjoyed. I'll see you guys tomorrow on the market open. Bye, everyone. Have a good one. Good night.